Thank you IMT for inviting me. I'm happy to be here, honored to be here. And for the first time, I'm talking from this kind of a thing. It's like, those avatar kind of setup. As if screen se kuch ho jayega, kuch pani niklega, water aise kuch ho jayega. Okay, so I'll talk about what? About the budget and other topics. So shall we start? Okay, so my topic is about the budget, the union budget, which happened recently, and also broadly about a few other topics. Now, starting with the budget, I'll talk a very commonsensical kind of perspective, not like an economist or whatever. So to set the context, why do we need to demystify what happened in the budget? Because there is a mistake, ye kya hai types. So I'll try to demystify that to the best of my abilities. So to set the context as to why we need to demystify ye kya hai, what the budget is, and the way the common man looks at it, I have a short video, if you can run that. It's a short one, but a very serious one. It will give a perspective ke budget kya hai and how the common man perceives this thing called union budget. Yeah, please.
Like all reforms, this measure is obviously disruptive as it seeks to change the retrograde status quo. Drop in economic activity, if any, on account of currency squeeze during the remonetization period is expected to have only a transient impact on the economy.
अरे कहना क्या चाहते हो?
Yes.
So that is the union budget, and that is the common man's perspective. Ye kya hai? So let me start. You have this thing, na? Turn this on. Yeah. Yes, that is my subject. Can you read on the right side? Wo kya likha hai? Yes, can you read? Kya likha hai? And let me say, I am no economist. I talk of whatever I see around me and whatever I think about stuff of what's happening around me. Okay, so firstly, what is the budget? The budget is simply the government saying in the coming financial year where they will get their money from and where they will spend their money, as simple as that. So is that significant? Yes, no? Yes, why? Sorry? Okay, deficit will be there. And what else? Okay. Does it impact your life? Yes. In what way? Taxes. Anything else? Right. Employment. In what way? Right. So the thing is, in the budget, I will show you some numbers. In a way, most of it, 90%, 95% of what happens, where the money comes from and where the money is spent is kind of fixed. The finance minister or other officers can only do so much. But even then, even after those tweaks, small tweaks at the margin, it does impact our life. Now, when we say our life, what is the meaning of our life? It is not just our personal income tax. It is about the entire economy. Wo dikhaya na? Economy, GDP, and all those things. It's about the entire economy. Now, what does the economy comprise of? Any economy, or in particular our economy, what does the economy comprise of? Hello? Sorry? So you guys must have scored high in economics. And by the way, let me tell you, in college, I was weak in economics. The professor would come, draw these charts and all, but samajh mein nahi aata tha. So a country's economy is simply whatever we all together do in terms of productive activities. So what are the activities we do? Productive activities to earn money? Investments and? Yes, manufacturing. And what else? Yes. So if you look at that pie, GDP pie, what does it comprise? Manufacturing, services, and anything else? Yes. Broadly, these only. So in a way, the budget touches all these aspects. And that is the significance of the budget. What happened? You do something wrong? If I'm off course, yeah. So this broadly is the story of the budget, where the rupee comes from and where the rupee goes. So if you can read these numbers, on the left side, it is showing the rupee comes from. Look at the biggest component, 34%. 34% is borrowing and other liabilities, which means government udhar pe chalti hai. 34% comes from borrowing. And what is this borrowing? Where does the government borrow from? Yes, in what form? Yes, the government issues government securities, and that is used largely to fund the deficit. What are the other major components? Tax. So look at this. Corporation tax, 15%, GST, 17%, income tax, 15%. What happened? You did something wrong? No. Somebody put up the light. It is like those, in those COVID times, you're in a cinema hall, suddenly you enter the cinema hall and something happens, light goes off, that kind of feeling. Okay. And this side shows where the rupee is spent. And what are the major heads? Look at the biggest component, 20%. 20% goes into what? Sorry? Interest payment. Now think of it. Does the government or anybody have a choice or have a decision in that? So that is fixed. The government does not have a choice. So a major chunk of where the government spends their money is fixed. Or kya hai, the major components? State's share can't do much. Whatever the committee has decided, so much is the devolution to states, that will flow to states. Then we have all this, finance, commission, others, transfers and all that. Defense is one big head, can't really help it. Defense to kharcha karna hi hota hai. So now when you see this pie chart, where the money comes from and where the money goes to, do you have any thoughts, anything you want to ask me? Or does it show anything different from what you perceived earlier and what you are seeing now in front of you? Any difference in that?
That the government is already accounting for the deficit. Generally, when we prepare budget, we try to match the outflow or inflow. But in this case, the government is already trying to finance that deficit by borrowing.
Right. In fact, if you look at our history since independence, budget has been running a deficit and deficit only. That's how we have all been. So is it good, bad? That's a debate, but that's how it has been. Arguably, deficit is bad. But the counter argument is, for a growing economy, developed economy like ours, we can have a bit of a deficit, like 2, 3, 4, 5. Oh, current has come. Good. So 2, 3, 4% is kind of okay, but a big deficit is not okay. Because fiscal discipline is important. Because if you have a high fiscal deficit, that has other negative economic connotations. So I will show you some numbers and discuss some numbers. So yes, I say this correct. Having a perennial deficit is not good. Now, if you are aware, in the context of this deficit, how much deficit the government should have, or what should be the discipline, there is an act. Anyone? Any bright mind? Smart Alec? What is that act which says what should be the target about fiscal discipline or fiscal deficit? There is something called FRBM Act, Fiscal Responsibility and Budget Management Act. That says that our fiscal deficit should be how much? Yes, 3%. Should be 3% of GDP. That is the target. Now think of it, FY21, how much was the deficit? 7.5%. Any other? 6.5, 6.5. Anything else? It was 9.2% of GDP. And this 9.2% of GDP is center only. So we have center plus states. So it was around 13% of GDP in FY21. So what happened? In FY21, the country faced a challenge. So the government had to spend more. To spend more, the government had to borrow more. And deficit went up to 9.2% of GDP of center only. From those levels, gradually, the deficit is coming down. And how much is it now? 5.9 in which year? 23. Okay, any other guess? Anybody else? 6.4 which year? 23. And 5.9 is which year? For? Right. So this year, estimate is 6.4%. Next year target is 5.9% of GDP. So it is gradually coming down from 9.2% in FY21 to 6.7 to 6.4 this year. Target is 5.9 this year. And the target they have given is 4.5% of GDP by FY26. That is the broad target the government has. They call it glide path. The glide path they have broadly given. So let's move on with this. Whatever tweaks the government can do at the margin, it does impact our lives, our industries, our economies. Now, in the run-up to the budget, what do we think, or what are the noises that we hear? We have those wish lists from industries, hum ye chahiye, hame wo chahiye, and all that. Also, this extent of fiscal deficit and the quality of fiscal deficit. Now, what is this quality of fiscal deficit? The money which the government spends largely goes into what is called revenue expenditure. And what are those? Yes, salaries and one-time benefit of? Look at this. So what is the biggest component? Interest payment. 20% goes into interest payment. So the biggest component is in interest payment, and we have other revenue expenditure. What is happening gradually is the extent of revenue expenditure is coming down and the extent of capital expenditure is going up. That is the positive aspect. And that is what is referred to as a jargon, that quality of fiscal deficit. In the sense, if on one hand, government is running a high fiscal deficit, but they are spending on revenue only, it is not good. The fact that they are upping the capital expenditure, that is good, and that is the positive aspect of the deficit. Now, before every budget, there is an industry wish list. There are so many things industries ask for. Now, the budget is not the only platform where these changes can be made. Can be done anytime, like we have this PLI going on. But the point is, during the budget time, so many things get reviewed, and that is a potential point where changes can be made, which is why the budget is an important exercise. What are the noises before budget? Industry has a wish list. We have our expectations about taxation and all these things. And also these politics, like last full budget before elections and all that. Because next year we will have a vote on account before the this thing on the budget day. And after election, we will have a full budget as such. So now we will look at some numbers. India's first budget. Who was the finance minister? Independent India's first budget. Who was the finance minister? Can you see the screen? Screen में कुछ लिखा है क्या? So you are saying screen is visible. You are saying screen में कुछ लिखा भी है. Can you read that? Good. So R.K. Shanmugam Chetty was the first finance minister. And now guess what could have been the size of the first budget? As in, I'll give you a hint. As of today, the size of the budget is 45 lakh crore. 45 lakh crore is the size of the budget. As in total of expenditure, total of inflows. Inflow including borrowings, whatever. Expenditure is 45 lakh crore total. Any guess? What could be the size of the first budget? 5,000 crore. Okay. Okay. 5,000 crore, 500 crore. Interesting. Any other guess? Yes. Any other guess? Okay. I will and also try to guess what could have been the extent of fiscal deficit amount. Today, we have something like approximately 17 lakh crore as the fiscal deficit. In the first budget, 5,500 crore, what could have been the fiscal deficit in the first budget? Sorry? 5,000 crore of fiscal deficit. Okay, now let's see. The size of the first budget was rupees 200 crore. 197.39 crore was the size of the first budget. And the fiscal deficit was 25 crore, 24.59 crore. The entire budget size and the entire fiscal deficit. Today, some people earn that kind of money. And going forward, maybe someday, some of you will earn that kind of money. Yes, no? Okay, let's move on. And by the way, look at the breakup. Look at it, 47% was spent on defense. And why so? वो टेक्स्ट पढ़ लो, टेक्स्ट में कुछ लिखा है. हाँ, ये टेक्स्ट पढ़ लो. Imagine the times we were going through in that time, 1947. And what you see in the text, that will give you a clue as to what was happening. Now, in the current financial year, broadly what happened? FY23, current financial year, broadly what happened? New tax regime, वो पहले आया था. What I'm trying to ask you is, if you look at the developments or the major developments in terms of finance, government finances this year, current financial year, broadly what happened? The major developments. Okay, what else? Has reduced. What are the biggest movements this year? Budget policing. I don't know. Okay, so let me come to the next screen and then I will talk of this. The biggest developments that happened in the current financial year is that the government collected much more in taxes than what the government budgeted. So if you can read these numbers, see, this is the variation, not the collection, but the variation. This is the variation in gross tax revenues from in this thing. RE means revised estimate. And look at this, 2.9 trillion. 2.9 lakh crore is the additional which the government collected in taxes from what they budgeted. And that is a big number, 2.9 lakh crore. Ye kahan se aaya, this 2.9 lakh crore? Income tax, corporation tax, GST. So what does that tell you? How do you read this? The government collected more tax than what they budgeted, not just a little bit more, but significantly more. How do you read this? Yes, industry is doing well. Anything else? High inflation. Yes, very good. Because what is the base of collection of tax? The base is the nominal GDP, which is real GDP plus inflation. So nominal GDP this year is higher than what the government budgeted. And that is the base. So all taxes are doing well. Now think of it, apart from industry is doing well and inflation and nominal GDP and all that, what else may have contributed to high tax collections or better collections? That is obvious. Estimates were conservative. And against that, I'm saying in terms of systems, what may have changed? Yes. So whatever happened earlier in terms of DMON, in terms of GST, in terms of RERA, in terms of e-challan and all those things, that is gradually bearing fruit. In terms of GST, 1.5 lakh crore per month has kind of become the base. So all these regularizations have helped. So multiple things. Industry is doing well, regularization, conservatism earlier, high inflation, so high GDP, nominal GDP, all those things are there. Now, where did the money go? Look at this. Variation in revenue expenditure. 2.6 lakh crore of this variation, where has it gone? Food, fertilizer, subsidy. And mind you, these numbers, 2.6, 0.8, 1.2, these are not absolute. This is the variation, budget and revised estimate. So what happened in food and fertilizer?
Because of the Russia-Ukraine war, I guess they have to spend more on the food grains, food security.
Okay, you are almost there. Just extend your thought. Because of Russia-Ukraine war, where the government had to spend more? Exactly, fertilizer. So because of these geopolitical tensions, fertilizer prices globally went up significantly. So the government spent much more on fertilizer, which you may not see in media or social media. That is one. What happened in food? In terms of food or food subsidies, rather, you see a higher amount, this $0.8 trillion. What was that thing? Okay. Oil. Oil se kya karna hai? We're talking about food subsidies. Did you say palm oil? Okay, theek hai. What was the biggest component? Yes. What is it called? That free food? There's a name for it. Free food grade. There's a name. Big name. PM. Yes. Full form. Pradhan Mantri Garib Kalyan Yojana. So that was continued till when? Sorry? Another year. Any other guess? This Pradhan Mantri Garib Kalyan Yojana was started in COVID times for giving free food grain, I think 10 kg per month per person or something. That was till December, and December only. It has not been extended. It was there till December 22 only. Now there is some other scheme. Still they give some free food, but not as much, maybe half the amount or something of that sort. That's about the food and fertilizer subsidy. And these two are the major developments in the current financial year. The government collected much more than they thought in taxes, and the government spent much more than they thought earlier in terms of food and fertilizer subsidies. So what happened in this budget? Any thought comes to your mind? Reduce subsidies, okay. Anything else comes to your mind? Okay. By the way, how many of you saw the FM's budget speech? Okay, एक हाथ दिख रहा है, हाँ, और एक हाथ दिख रहा है. So 2 of you saw it actually on TV, and others busy with classes. Yes, no? Huh? Okay, yes. Anything else comes to your mind? What happened in the budget? Okay, so let's move on and let's see. So lots of numbers here. I will just tell you the headlines. So this is the tax revenue. 33 lakh crore is the tax revenue, including everything. Corporation tax, income tax, wealth tax, blah, blah. Sab kuch leke 33 lakh crore is the tax revenue budgeted for next financial year, of which state share is 10 lakh crore. This is called devolution. So what is the state share? Like when you go to a restaurant, you get the bill, you see central GST, you see state GST. So as per formula, so much of money has to be devolved to states. That is the state share. So this 33 lakh crore becomes 23 lakh crore. Then they have all this non-tax revenue and all those things. Total revenue is 26 lakh crore. Capital receipt, these are the ones. Now look at this, debt receipts, almost 18 lakh crore. And that is a big component. So much the government is borrowing. Total capital receipt so much, so 45 lakh crore is the budget size. Now think of it, the source of this borrowing, you already said correctly, it is government borrowing, G-Secs, issuance of government securities. What is happening for quite some time is, at some point of time, G-Sec issuance as a source of revenue or debt, this thing, funding for the government used to be government borrowing, like 90%. Now that 90% is down to something like 60% or even 55%. So what happened? This movement from 90% to 60 or 55% the government has substituted issuance of government security with something else. What is the something else? Sorry? Foreign debt. Atmanirbhar. Yes, brilliant. What's your name? Shivam. I said brilliant because, I think for the first time in my sessions, this thing has been correctly answered. Nobody can answer this. So what we call post office, officially known as small savings schemes, that 30% has, this thing has replaced government borrowing, issuance of government securities. So issuance of G-Secs as such, and this small savings schemes. So what do you think next year in terms of small savings, how much they will collect? They'll get more than this year, less than this year. Something happened recently in terms of small savings rates. What happened? Yes, rates have increased. So if the country is doing well, if the economy is doing well, and if rates are increased, small savings will continue to contribute to this thing. This is from another source I have taken. So this is the gross tax revenue. Gross means before transfer to states. This is the growth revenue, the growth percentage they are building in, this 10.4%. So what they have done is for next financial year, the government has budgeted 10.4, 10.5% as nominal GDP growth, and they are budgeting same increase in taxes. There is a funda called tax buoyancy. Tax buoyancy means if the GDP grows so much, if tax increase also grows so much, buoyancy is 1. And by the way, in the current year, tax buoyancy is more than 1. It's like 1.1 times. The government is conservative and they are taking a buoyancy of 1 only, as in they are taking a building in this thing of 10.4% only increase in tax collections over the current year. This is the breakup. Corporation tax so much, income tax so much, and GST so much. And look at this one. So this is gross tax revenue, the bars, and this is the tax to GDP ratio. So 11.1% is center only. States also collect taxes. That's a different number. That's a higher number. So for center only, it is this 11%. 11.1% of GDP is the tax to GDP ratio. This is the expenditure. So much, 45 lakh crore. Now look at this number. If you can see this thing, okay, this side you cannot see this thing. Look here, 10 lakh crore. 10 lakh crore is the capital expenditure, and that is a big number. Okay, if you look deeply into those numbers, you will see certain other things also. As an example, there's something called EBR, extra budgetary resources or extra budgetary borrowing. That was below the line, what accountants call below the line. That below the line has now come above the line. They have stopped those below the line. And that is now reflecting in this 10 lakh crore number. Any which way, this number is increased. I show those numbers, how much it has increased, but that is a positive development. Now look at these numbers. Interest to total expenditure is 24%. 24 estimate. This is big, but can't help it. And look at the subsidies. This is fertilizer, and this gray color is food. So FY21, so much went into food subsidies. You know what happened in 2020? The government had to support, the government had to give subsidies. So much went into food subsidies. So see, gradually this thing is coming down. Food subsidy from so much to now here, kind of same. It is coming down next year. And look at fertilizer. It has gone up here. Current year, because of, as you say, the Russia-Ukraine war, geopolitical and all those things, this subsidy went up. Now look at the savings they will get here. From here to here, current year to next financial year, they will save significantly on subsidies. And that is helping the government. 5.6 lakh crore to 4 lakh crore is the subsidy they are building in. Capex. So this bar shows as a percentage of GDP. FY23, it was like 2.7, 2.8% of GDP. Next year, FY24 will be like 3.3% of GDP, which is good. If you look at history, it was like, here we see something like here, 1.5, 1.6% of GDP in FY15. That 1.5% of GDP is going up to 3.3% of GDP in FY24. So that way, that what we call the quality of deficit. The quality of deficit is improving. And look at this thing, capital expenditure in the budget. So FY21, it was actually low, 12%. 23 was 19%. Now, how to react to this? In FY21, it was only 12%. Justified, unjustified, correct, incorrect, what do you think? FY21, we faced a challenge. The country faced a challenge. Even in a challenging year, the government spent less on capital. So right, wrong, they should have spent more, should have spent less. Some thoughts? Hello? Kuch to bolo. You are saying now means current times. Now, what I'm asking is in FY21, see, look here. FY21, in a challenging year, the government spent less on capex, and now they are spending more. So I'm saying in FY21, should they have spent more than this, what you see? So the curve is dipping here. Curve is dipping here and going up now. That is a good point. So one, this thing is ki, deficit was anyways high, 9.2% of GDP. On top of that, if they spent higher, then they would have had an even worse situation. Would have been even higher. I'll give you the logic now. In those days, now, Sanjeev Sahni used to come on TV and he would say, what is the point in pressing the accelerator when you have one foot on the brake? If FY21, calendar year 2020, we were all locked in. So if we cannot go out, then what is the use of the capital expenditure, particularly in contact intensive sectors? So now, as you see, now that we have opened up, capital expenditure also has moved up, which means if the government spends the money, it has to be utilized. So that utility is happening now. So this is the way it is flowing. Revenue and capital. So FY17, 86% was revenue and 14.4% was capital. And now look at this. 78% is revenue and 22% is capital. And that is one positive development happening in the budget thing over the years. Okay, I will skip this part, lots of technicalities. So what it shows is the various ways of looking at the capex, not just the budget amount, but if you look at this, like, you know, PSUs and all those things, CRISIL ka fund hai ye, capex 1 to 3 karke. So broadly what they're saying is ki whichever perspective you take, capital expenditure has been moving up. This is one worrying aspect. Now look at government debt. FY21, it was as high as this, 89.6%. What does this comprise? Isme kya kya aata hai in government debt? This government debt, which you see, 89.6% of GDP, now it is 86.5 FY23. This thing called outstanding liabilities, isme kya aata hai? Outstanding liabilities of the government, kya hai isme? Interest, sorry? Yes, the borrowings which they have made. The government issues securities, outstanding securities, so the this thing on that, plus small savings also. So who issues debt? Center plus states plus the small savings. So all those things are outstanding, and that comprises the outstanding liabilities of the government. And we can discuss and we can debate, it is high, it is low, or whatever. But this is the biggest thing which is tracked by the global rating agencies. कौन लोग है वो? These rating agencies, global agencies? CRISIL. The global rating agencies. Yes, S&P, Moody's, and Fitch. So for them, it's a big thing that we have so much of outstanding government liabilities. Now, if you look at the comparison, it's from the economic survey which came prior to the budget. 2005, it was so much. 21, it was so much. Now look at India. It is hovering around here. Look at other countries. Japan, US, they have so much of outstanding debt. But what is our rating? Just AAA. Sorry, BBB. As per all those S&P, Moody's, and Fitch, we are just investment grade, BBB, which means one notch downgrade and we become junk. Whereas all these are whatever you call them, Japan, US, UK, France, they have so much of high outstanding debt. So what the rating agency says, one is कि आपका जितना outstanding debt है, whatever 80-90% of GDP, plus they say your per capita income is low, so your ability to service the debt is that much less. Whereas in these countries, they have a higher per capita income, so have a better ability to service their outstanding debt. Anyway, that's a different debate. But in spite of we being somewhat better, you look at this, so much outstanding, 2006 to 2021, they have a AAA or that kind of rating. So we improved somewhat here, 89.6 to 84.5, again, little bit worse off here, because in FY23 also, the government borrowed a lot. This is the subsidy, this thing. Pre-pandemic, so this shows the subsidy as a percentage of revenue expenditure. It was like here, 11-ish. It is coming back here in next year. So 21, what happened? Why was it high? FY21, why was it high? What did the government do in COVID? Sorry? Jor say. COVID relief fund. We discussed just now. 10 minutes pehle. Subsidies. Food subsidies and fertilizer subsidies. So now the subsidies are coming down. So this state's already down. Why did it go up here? From FY22 to 23, why did it go up? Yes, cost of? Yes. So they continued the Pradhan Mantri Garib Kalyan Yojana for 9 months than what they said earlier, till December, I mean this financial year, and high fertilizer subsidy. But now, thankfully, that should come down. This is the path of consolidation. So as I said, FY21, center only, apart from states, it was 9.2% of GDP. 6.4 is this year, current financial year, and next target is 5.9% of GDP. But borrowings are going up. So what happens is, one is the percentage, 9.2%, 5.9% of GDP. Other this thing is, the size of the GDP is going up because we're a growing country. Size is becoming bigger. So whatever be the percentage, the amount of government borrowing is going up. So you look at this. Gross market borrowing is going up. ये difference क्या है? Net and gross market borrowing. What is the difference? So you see here, this dark blue or whatever this is gross, and this green or blue or whatever is a net. For the same year, like 23, we have 14.2 of gross, we have 11.1 of net, same financial year. So what is the difference? Just guess. Don't have to know everything. You can just. Hello, any wild guess? We would be giving out, meaning? Giving to, didn't get it. Someone else means what? We as in paying something to whom? Yes, back to whom? सही जा रहे हो? बोलो. Lending to someone. These are maturities. So government securities come with defined maturities, 5-year, 10-year, 15-year, 20-year. So every year, the bonds issued earlier matures. So net of maturities, the net amount which the government actually gets is the net government borrowing. So in FY23, gross is so much. Gross means the amount of fresh supply of government securities hitting the market is this much, 14.2 lakh crore. Net of maturities in the current financial year, the government got so much, 11.1 lakh crore. Clear? This is the breakup of how the deficit is coming down. Current year, 6.4% of GDP. Next year, 5.9% of GDP. So how is it coming down? So here, green is positive, it is minus. Minus means positive, deficit coming down, and red is negative, deficit going up. So 6.4 is becoming 5.9. So in this differential from 6.4 to 5.9, this green part, 1.1 is lower subsidies, lower food subsidy, lower fertilizer subsidy. That is contributing to it. And where are they spending this 0.7? This is the higher capital expenditure which we discussed earlier. So 1.1 is the benefit and 0.7 is the what the government is giving away or whatever spending in terms of capex. This is the long-term average, 4.9%. So it was 9.2% FY21, 23 is so much 6.4, this is FY24 actually, it is 5.9%. So we are gradually coming back towards fiscal consolidation. And what is the target? We discussed sometime earlier. 4.5 by FY 26. And what is FRBM? 3%. That is a long-term target. So this is almost done with the PPT. The budget is kind of done. So like you said earlier, the personal income tax. So when the announcements were happening, people were looking like this. Up to 3 lakh, no tax. Up to 7 lakhs, also no tax. But then it was in the new tax regime. So I will show you some numbers. What does this mean? What this means is, so in the old regime, you don't have all this ATC and blah, blah, so many exemptions. Sorry, old regime, you have the exemptions, and new, you don't have the exemptions. So if your deductions, like whatever, ATC, this and that, all that, if a deduction is rupees so much, then in the old tax regime, you break even with the new one. In the new one, tax slabs are lower, you pay low tax. Only if you have high deductions, like whatever, housing loan and ATC and all that, you will break even in the old tax regime. So as an example, 10 lakh. If you earn 10 lakh, and if you have so much, 2.65 lakh of deductions, 80 this, 80 that and all that, housing loan, then you are breaking even. I'll show you one example. So this person earning so much, 10.5 lakh. So if he has rupees 2.65 lakh of these exemptions or various, what all he has, ATC, ATD, housing loan and all these things. If it is 2.65 lakh, he is breaking even. Otherwise, new regime is better for taxation. So that is mostly about the budget. I have only a few more slides. That was about the budget. So now a little bit about the topic of today's this thing, the next decade for India. So I'll talk broadly about whatever the markets and economy and all the stuff, because Purmit will talk about the our equity growth story. About the next golden decade. This is the projection. So look at this. It is CRISIL, not like a sell-side report. So what CRISIL is saying, IMF forecast from calendar years 22-26. GDP growth is based on constant prices. Source IMF. Okay. And look at this. India, China, and other countries. So India today is the fastest growing major economy in the world. That is kind of done. You would be hearing this everywhere. That is there. So this is the 5-year average GDP growth rate, not just something off the cuff. Now, what is our resilience? Our resilience is, so this slide shows merchandise export. So look at these numbers. Look at Vietnam, 90%, Malaysia, 80%. So all these countries, so much of their merchandise export is this thing, part of their GDP, which means if at all there is a global slowdown, recession, or whatever happens, these countries would be hit to that extent. And look at India here. Okay. Now I said merchandise. What is the other thing apart from merchandise? What do we export? Yes, services like the biggest one. Yes. So this is merchandise only. So this, whatever is 15-20% is merchandise only. We have this plus IT exports. But any which way, our dependence is not as much. So like you see these numbers here. These countries are that much more dependent. So this is a major source of our resilience in case there is some whatever global recession or slowdown or whatever. This is the bank credit growth rate. This is a little old, but you will get the idea from here. This is the deposit growth rate, the blue line, and this is the yellow growth, this thing, credit growth rate. So banking deposit growing at so much, like 10%, 9%, 8% in that range. And this is the credit growth rate, so much. So what do we infer from this? Credit offtake from banking system, from banks, growing at a much higher rate than deposit growth rate. What does this show you? If we have to infer something from this, what would you infer? People are consuming more. Okay, people like who? Consumers? Okay, think of it. Banking system credit offtake. Who takes loans from banks? Right, industry and retail. Anything else? RBI takes loans from banks. In your case, what do they take loan from banks? No. Wait, park that for now. So, who takes loans from banks? Like you correctly said, industry, retail, and MSME. So the only sector which has underrepresentation in banking system loan is agriculture. Like whatever, 3-4% of the banking pie. Otherwise, everybody takes loans. Industry, services, MSME, retail, everybody. And by the way, there's a base effect also here. Base effect meaning if you look at the absolute quantum of credit offtake, it is higher, but not as much higher than the deposit growth rate. Last year, growth was less. So this year, the growth percentage is high. Apart from all those things, what it shows is, of course, what you said is correct. Retail, we are consuming more, we are taking more loan, this thing. In terms of industry, if not for capacity creation, at least for working capital, industry is taking loans. Private capex will happen gradually. I mean, uncertainty, global, wo sab hai, maybe 1 year, 2 years, 3 years down the line. But at least for working capital, industry is taking loans. And us consumers, we are taking loans. That shows the buoyancy in the economy. Okay. Deposit growth rate also will happen. So base was high earlier, so percentage is not as much. But deposit growth also will happen. Why? We have opened up now, and banking system deposit rates have gone up than earlier. Okay. What you said now about this, whatever rare because of something, a different thing. RBI has something called a liquidity management system. It's called LAF, Liquidity Adjustment Facility. So under this, they do all this repo, reverse repo, SDF, all those things they do. That is for liquidity management and not really for whatever, taking money from banks and all these things. This is the rating scenario. So this thing called upgrade downgrade ratio. So what is this thing? If you look at this gray line, the credit ratio measures in a particular time period, particular time phase, number of companies upgraded by CRISIL and number of companies downgraded by CRISIL, that ratio. Now look at this. H1 of 23, which is April to September 22. In H1, that ratio is here, 5.69. So I repeat, in April, September 22, CRISIL upgraded 5.69 times more companies than they downgraded. So what does this mean to you? Hello? Sorry? Who was it? Right. So what is it the businesses did well? Of course, they are doing well, which is why the agency is upgrading more companies than downgrading. What is it that did well? Like what? Liquidity management means? So what they did is they reduced their debt level. So what is called leveraging? So their extent of leveraging they have reduced much than earlier. ये शुरू कब हुआ था? In COVID. Right from the COVID days, corporates started deleveraging. So what is called the twin balance sheet cleanup? Banking system NPA, that has been mostly cleaned up, and corporate balance sheet deleveraging. These are the positive developments that have happened. So by the way, it won't sustain here, but the point is a credit ratio of more than 1 is positive. More than 1 means CRISIL is upgrading more companies than they are downgrading. That is the positive development. So I think I'm broadly done. I think one more. This is the challenge, current account deficit. And current account deficit is high. One is, of course, crude oil price, whatever prices that are prevailing today. Plus, there is some embargo. And by the way, if you are aware of this thing, whatever crude oil we import, about 30-35% of that we process and export. Now there are some limits on that export. So now export is growing less, import is growing much more. So if you look at these numbers, 4.4%. So in Q2 of FY23, which is September 22, CAT was 4.4% of GDP, which is high. But any which way, if you look at this 2.2% in previous quarter, 4.4%. Now here the estimate is 3.2%. So current account deficit is a concern, but not so much of a overwhelming concern. It's kind of manageable. Now, how do we finance this current account deficit? The deficit which we have, current account, where do we get money from? Forex, where do we get it from? Right, FDI. And what else? What are the components, capital account? One you said is FDI. Apart from FDI, what else? Yes, very good. So there are broadly three avenues. Two I've already got it. FDI and, as you said, NRI. There is one more. And by the way, don't say exports, because we import more than we export. So don't say export. FDI ho gaya, remittance ho gaya, NRI ka, and one more is missing. Borrowing. ठीक है. पैसा आता कहाँ से है? Just think that FDI ho gaya, NRI ho gaya, what else? Easy. Yes, FPI. FPI, NRI remittances. So somehow it is kind of manageable. We have a forex reserves also, $576 billion, kind of manageable. This is one challenge which we have. So that's about it. So questions, I mean, we'll have a Q&A session later. Yeah. Thank you. I'll open this.
Thank you very much for that insightful session, sir. The next speaker for today will be Mr. Gurmeet Chadda. Mr. Chadda is the co-founder and managing director at Complete Circle Wealth. Before starting his venture, sir worked as the head of investments, North Zone for Citibank. Under his leadership at Citibank, the assets under management increased from rupees 3,600 crores to rupees 6,000 crores over the span of 3 years. Sir is also associated with the Reliance Mutual Fund for 7 years, serving multiple roles. His last designation was that of the regional head for the Greater Mumbai diaspora. Over his long and distinguished career, Sir has acquired the rich experience of serving both retail as well as corporate clients. A respected name in the banking and wealth management universe, he regularly shares his views on personal finance and equity investing in multiple respected publications such as Economic Times, Mint, and business news platforms such as CNBC, ET Now, and Bloomberg. Today, Sir will talk to us about, is the next decade going to be the golden period for the Indian equity market? We would now request Mr. Gurmeet Chadda to come up on stage.
Thank you for sparing time on a Sunday afternoon, and especially getting budget numbers can make you sleepy. So I will spare you the presentation. What I will do is I'll do an extempore. I would seek inputs. I'll tell you what I feel about India, and then we'll take it forward. So while Joydeep discussed, dissected the numbers for you, I will try and make some sense of those numbers in terms of trends. Okay, what are the trends? That's what we're here for. We're here to look at the future. What has happened, and where we can benefit. As an audience, in terms of you are young guys, likely to get placed very soon. I wish you all the best. Some of you will become entrepreneurs. I hope more percentage becomes entrepreneur. And where we can participate in this India story. So 4 clear trends, in India which are coming. The first clear trend is that we are moving towards financial assets, right? As an economy, so US 60% people invest in equities. India, after all the effort we guys have been putting, that number has gone up to 6%. So there is a long, long way to go, right? So one is a clear shift from hard assets to financial assets, right? So you're moving from real estate, gold, plot kharid lete hain, corner wala, to, Adani ka kya lag raha hai, right? So that trend is happening in the market where we are becoming more savvy about markets. The second big trend, which Joydeep also highlighted, was the huge expenditure government is doing on capex. Now, a lot of you will get confused what capex is, right? And he made that chart that this ratio has gone up from 1.6% of GDP to 3.3% in last 5 years, which is like a double jump, right? 10 lakh crores this year. Now, what is capex, right? You spend more on roads, you spend more on infrastructure, you spend more on health, you spend more on digital skilling centers, you create 5G, you create towers, right? So it is both physical, digital infrastructure. So once you create infrastructure, it creates jobs, it creates economic prosperity, right? And then it creates, entrepreneurs out of those, prosperity. So I don't know if you're aware, India has given so many housing finance licenses in last 3-4 years. So there are companies, I know friends who started a housing finance company because PM launched a PM Awas Yojana where they were giving subsidies. I don't know if you're aware, up to certain loans, right? Up to 20-25 lakh, you were giving interest rate subsidies. So a lot of these startups came up on giving affordable housing loan. There's one in Gurgaon, if you track, it's called Ummeed Housing Finance, done very well, raised 2 rounds, and they're young guys and they're really doing well in a very young stage, right? Then it creates jobs. So once you set up a startup, right? I create a housing finance company, I need credit underwriters, I need sales guys, I need collection guys, I will do tie-ups, right? So one clear opportunity of CAPEX is that it creates the assets for job creation, for milking revenues for the government, because let's say you've created a road, you'll continue paying toll for, so if you go to Dehradun from here now, which used to be 5 hours, 6 hours, today you go for 3 hours, and by the time you exit, you realize how much you have paid. And now this becomes, recurring income, and the people get employed, right? The economy moves. So US grew like this. They made more and more roads, right? In 60s, 70s. So there's a saying that economy which moves faster, grows faster, right? So CAPEX is a huge opportunity, and a lot of opportunities will come in digital infrastructure, in physical infrastructure, which you as young, management graduates will take advantage of, either working for some companies or maybe, some setting up something of your own. The second big subset of this actually is manufacturing. Now, anyone who knows what is India's share of, what is manufacturing share in GDP right now? Anyone? Yes? 15%, right? 15% is the share of manufacturing. The government of India goal is 25%, right? So government ye bol raha hai ki we will be the 3rd largest economy by 2027. That's what even IMF is saying, right? We'll surpass Japan. So it will be US, China, India. And we want our manufacturing to be 25% of GDP, right? Currently it is 15%, very ambitious target. If you ask me, but if we do well, maybe 21, 22% is achievable, right? Which itself is a quantum leap. Now, where does that opportunity come from, right? So where are the opportunities in Indian manufacturing? So what did government do? So government launched PLI, right? Production linked incentive schemes. And there are right now 14 sectors. They have given various incentives ranging from 5,000 to 25,000 crores, textiles, chemicals, semiconductors, electronics, right? Defense, right? Toys, leather, shoes manufacturing, bahut sara hai, right? Now, what this has done is that, so one, government has given a incentive. Second, they reduce corporate tax. If you come to India, you set up a facility, manufacturing facility, they reduce the corporate tax. Third, COVID happened, right? So actually, you can also say PLI was COVID induced. I mean, we can establish cause and effect. So what we are saying now is that we never realized that China +1 के बाद Europe +1 हो जाएगा. With the way Europe is facing a energy crisis. So what is happening now is there's a lot of pockets. There is a clear shift of supply chain happening from China to India. I'll give you an example. There's something called API. Anybody knows what an API is? I'm impressed. So what is API? If you see a capsule, you see a powder inside that capsule, right? This is called, let's say, the main salt, churan of the capsule. That's API, right? So what API is basically is what, let's say, Infosys does in IT to a Microsoft. So a lot of Indian companies, they make a part of the drug, part of the molecule for the big pharma. So Divi's Labs, for example, anybody's heard about Divi's Labs? Right? It's a listed company, makes molnupiravir. Molnupiravir is a API which is used in the COVID drug. Right? So I don't manufacture, I make something which is part of the final drug. In a very simple, it's like a pharma outsourcing in a very simple language. Now, China's market share in pharma outsourcing is 80%. So China ne COVID nahi diya. So Wuhan was not just the hub of COVID, it was also the API hub. एक तो virus दे दिया, दूसरा supply chain बंद कर दी. It's got shut because of COVID. So the world now realizes that I can't be 80% dependent on China on my supply. So it will not become 40% overnight, but over a 5-7 year period, you will see the dependency on APIs reducing from China. So every year, drugs worth $20 billion are becoming off patent. So जैसी off patent होगा, उसका generic version आ जाएगा. And pharma is not a spare part की आज Divi's से नहीं लिया तो कल Laurus से ले लिया, Laurus से नहीं लिया तो Jubilant से ले लिया. You need to test. There are various stages of validation. You will experiment. So once you get an approval, you take 3 years to get an approval. Once you get in, it's very difficult to replace you. So nobody can really replace Divi's unless that drug becomes outdated or the disease gets completely cured. So this is one opportunity. I'll just give you an example, right? The second opportunity is chemicals, right? Again, China has more than 80% share in chemicals, right? Benzene, phenol, fluorination, right? So one area where within chemical India is gaining is fluorochemicals. Fluorochemicals are used in your refrigerants, right? Right? Then there's other area where we are gaining is soda ash. Anybody knows what a soda ash is? Soda ash is used to make glass. Glass is then used in house, automobile, etc. So that's the second opportunity which is coming. The third one which is coming is electronics. Right? How many of you heard Apple making iPhone in India now? 14? Yeah. You know what the target is by 2025? 1 out of every 2 iPhones would be made in India, iPhone 14. Right, so that's how big this is, right? Apple making iPhone in India. They've started doing AirPods. Gradually, you will get MacBook, right? Right? So within electronics, there is something called making as per specification, which is called electronic EMS, electronic manufacturing services, right? And there is something called making your label and the guy taking it from you, which will have better margins. एक में आपने जैसा मुझे Microsoft ने बोला मैंने वैसा बना दिया LED panel. एक मैंने LED panel बनाया and Microsoft said, this is good, let me put my label to it, right? That's a value addition because, right? So there are a lot of companies in India which are now moving into this electronic manufacturing services. Again, kind of an outsourcing, right? You're not making the final laptop, right? Or you're not making the final handset. You're making something as per specification. Any company which comes to your mind who does that in India? Who said Dixon? Okay, I'll give you a dairy milk after the session. Good, nice answer. There's somebody called Amber, which makes ACs. So all your ACs you see of Samsung, LG is made by Amber Enterprises, again based out of Gujarat, right? So many companies are doing that. So these are some of the, so manufacturing is a huge, huge opportunity in India. And I personally think this is where the maximum wealth will be made. We are now in Industrial Revolution 2. We missed the Revolution 1 because we aligned ourselves with Soviet unions of the world, became socialist. I don't want to get into politics, but this is our chance of, setting it right. So India was always the back office of the world because we always were getting outsourcing deals. Now we are trying to become the factory for the world. And this is where I think the next leg of opportunity is there for all of us. You can do that by becoming entrepreneurs. You can. So if I were you and somebody asked me where would I like to get placed, I would try and say, let me get into a nice place where, I want to get into a company which is into manufacturing, chips, electronics, anything, right? Another thing which is, again, subset of manufacturing is defense. So what Russia-Ukraine war has done, that countries have realized that you are on your own. Right? Jab ladai hoti hai, so you are, people can give you, supply you, but you have to fight your own battle. Right? So what this has done is there has been a huge increase in defense budgets across the globe. Right? And you'll be surprised, India, so everybody can't buy F-16s and F-17s from US, right? Right? Smaller countries don't have that budget. So India is now becoming a preferred partner for smaller countries. So recently, Armenia, one of the broken USSR, erstwhile USSR, gave a $250 million order to India for, fighter jets, right? Plus, India wants to change the dependency on defense. So our ratio was 80-20, 80 foreign, 20 indigenous. We want to now get to 50-50. Eventually, Atmanirbhar is what, as the Prime Minister says. So there are a lot of companies now in India which are now doing extensive work on drones, hand grenades, fighter jets. Which is the company in India who makes hand grenades for the army? Any idea? Earlier, this used to come from Germany. Now, there's a domestic supplier. Anyone? Sorry? There's this company called Solar Industries. Right? They have a plant in Nagpur. They make one hand grenade for 120 rupees. Earlier, we were importing it for $1,000. Right? So next time you go to Nagpur, they have a very nice facility called Weapon Assessment Range. There they allow you to do testing of hand grenades, right? Try going there if you travel to Nagpur, right? So then there is, they are making satellite propellants for ISRO, the same company. It's making drones, it's making Pinaka rockets. Okay, which company makes helicopters and fighter jets for India? Fantastic. So, what is the biggest revenue source for HAL? Sorry? Exactly. So 60-70% revenue comes from servicing and overhaul. And now their order book is now full for next 6 years. Which means since they're making more and more helicopters, abhi aap jaake Toyota ke showroom mein to service kara nahi paoge. The only one, which you can get it done is HAL. So I'm saying manufacturing will be a huge opportunity. I'm not trying to give stock tips, so don't take it as a stock tip and start buying after the session. So two themes I covered, right? One is financialization of savings, right? Second is manufacturing. So this I think will be a golden decade of manufacturing. The third theme is, is government changing our fabric as a society. See, we are a country of savers, right? So you would have seen even in 2008 when financial crisis happened, you guys were too young. I had started working. I was working in a firm. I thought, my job may not remain tomorrow. So the markets crashed 70%. Sensex fell from 21 to 8,000. Right. And I used to work for Reliance Mutual Fund, and we never realized whether the next day, and any day we could have been asked to go, don't come tomorrow. That is how painful that period was. Right. So one thing which is now changing in India is that if you see the new tax regime also, we are basically asking you to say that we give you two options. So save and, invest in ATC, ATD, NPS, and save taxes. Move to the new regime, save taxes and spend. Right? So what you will see now, कि मैं कभी save नहीं कर पाया. When I only used to make 60-70,000 rupees a month, how could I save 20,000? It was very difficult at that age, right, to do that. But I think this new tax, so what the government is what I'm trying to basically say is there is a consumption boom happening in India. And that is independent of what happens in the world. How many motorcycles Hero sells in a year? Any idea? Huh? Okay, how many cars Maruti sells in a year? Yeah. So this year they will do 18 lakh cars. Huh? And Maruti has 45% market share. So India 35 lakh cars kharidta hai. 40 lakh gaadiyan. You know how many, so there is a survey which has been done, which says that there are 2 crore bike owners who aspirationally wants to own car now. So India has two discretionary spends. There are 2 goals most Indians have. Apna ghar, apni gaadi. Right? So this is in top of the list. Maybe the new generation now doesn't want apna ghar because the parents have probably made one for them. But you know, these are the 2 biggest ticket things which you want to spend. And this also is a statement that you have arrived. Right? So when you work, right, what is the first thing you do? You want to have a good house, a good car, stay at a nice place, express yourself, you know. So what you would do, would you see over the next few years is that this consumption boom is only going to go up, right? How many of you have drivers and maids in homes? Have you seen them using smartphones? I mean, their smartphone prices would be probably more than the salary at times, and sometimes you get surprised doing that, right? So what they're spending on is drastically shifted. You know, when we were young, we were forcefully asked to do savings, take LIC policies, EMI बांध देते थे so that we could not spend. You guys are different, right? You have a choice and you are, you know, freely expressing yourself. So there's a huge consumption boom happening in India. So, and I think this will drive India. Plus, what is also happening is within consumption, we are moving towards branded stuff, right? So 12 years back, the atta came from a chakki, right? The tea was sold open, okay? So what has happened to a tea, coffee over last 10 years will happen to everything in your house, in your kitchen, in your appliances. So today you take breakfast cereals which are branded. Today you buy atta also from Ashirwad, which is ITC or Fortune. Today you buy pulses from Tata Sampann. Today you buy honey again from Dabur, right? So you name it, right? Everything is moving to, and COVID has expedited this. You want to have more hygienic, and then you also want to cook less. The time spent on kitchen has reduced in every household by 50%, right? So you want to cook less, which means the QSRs, which is the Domino's, the Pizza Huts of the world, the ready-to-eat stuff. So consumption boom is something which will keep picking up. And what happens is, you know, let's say you're earning 25,000 a month and you're barely able to save, let's say 2,000 rupees. I'm talking about somebody which is really lower middle class. Suddenly you make 4,000 or 5,000 more. So the jump is 20%. It's not 4,000. Right? So you were saving 2, now you're saving 6. So that's a 3 times jump. So on that 4,000 rupees, I can buy a mobile phone on EMI, I can buy a bike, I can even buy a small car for maybe 5,000 rupees EMI, right? So that's the third boom, which you would see that, in fact, in investing, we say, buy what you consume, right? So when you go to your house, you see which is the paint which has the maximum usage, or when you go and you pick up a car, you figure out which has the highest market share, right? So what I'm trying to basically say is that the third boom which you will see now is a consumption boom which will happen, and anything where market is informal and likely to get formal is something which will make a lot of wealth and a lot of job opportunities. So let's say, for example, cables and wires. Nobody bothered that cable wire kisi brand ka lena hai, right? Today you ask for a Polycab or a Havells. Nobody really bothered what tiles I want to use, right? Today you'll ask for a Kajaria, right? Nobody bothered what is the sanitary in your bathroom, right? Today people spend 2-3 lakh rupees on a bathroom renovation, right? पहले पूरा घर पेंट हो जाता था दिवाली में for 30,000-40,000 rupees, right? So what I'm trying to basically say is ability to spend, propensity to spend, and you want to have the quality thing is improving. What this does is you move from informal products to formal products, and when you move to branded products, right? It's more high. You pay more. There is more value add, and then that has a multiplier impact on the entire consumption story, right? The fourth one, you know, which is the last one, and then I deliberately didn't want to have a detailed presentation on it, is a turnaround in the way our PSUs are being run, right? Not many people will admit this. I've been a banker most part of my career before I started on my own in 2015, you know, I have not seen a State Bank of India reporting 14,000 crores of profit. If anybody follows, market a little bit or watches CNBC, you would have seen SBI gave a profit of 14,500 crores in one quarter. Mind you, this is more than HDFC Bank, huh, by the way. And this is 2 quarters in a row. Has anybody used the YONO app? Huh? You know how many clients SBI has onboarded digitally? Wild guess? जब से YONO app आया? It's more than Paytm, huh, by the way. Nobody talks about it. It's 5.4 crore customers. They've onboarded only on YONO app. So that's technically the greatest fintech in India. It's not PhonePe, Paytm. You know how many personal loans they have disbursed without checking the documents? SBI, huh? I'm not even getting into HDFC. Huh? 50 lakh applications last 2 quarters. You know who's the biggest home loan issuer in India now? It is not HDFC. State Bank of India. 6 lakh crores of home loan book. Kotak Mahindra ka total size 4 lakh crore hai. So it has added 1.5 Kotak Mahindra last 3 years, right? So there's a huge turnaround happening in the way. See, these are the centers which were centers of inefficiency. Right? Here, hamara sara budget, Jyoti was trying to tell you that subsidies and expenditures government was doing. I'm not getting into technicals. These were sucking us. So, and now they are changing. So there were 30 PSUs, there are already 11 left. Government wants to get 4. Which is the biggest site in Asia Pacific which gets highest traffic? If somebody answers me this, I have a special prize. So you know how many, so it's the most heavily transacted website in Asia Pacific. और लोग वहाँ genuinely काम करने आते हैं, कोई window shopping करने तो आता नहीं है IRCTC. You go there to book tickets, right? Right? And you're there for 3 minutes, right? Because it takes 3 minutes to do that, right? Now they're developing their own payment gateway, right? They're trying to do cross-sell now. You can book a Jubilant Domino's pizza on IRCT's website, right? So I can go on and on. I can give you so many examples. I just give you an example of HAL. So I'm thinking there are a lot of government undertakings which are now becoming efficient, right? SAIL India recorded the highest steel production ever. Just 3 days back, there was a tweet from Ministry of Steel, right? There are still some inefficient ones, right? Time lagega, 50 saal ke paap hai. It will take time for things to, culturally change. But that's the fourth theme, that a lot of our government machinery, is becoming efficient, and government job is not to be in business. It's not government business to be in business. And I think that is where we are gradually getting into. And efficient government, leaner government, productive government enterprises means more private sector participation, right? Means better opportunities, means better jobs. The last thing I'll just close the presentation. It's been a heavy one with you guys being around here for 1.5 hours. Is that also if you aspire to be something, and I'm sure most of you would now have taken a decision in your mind what you want to do in your career, right? Express yourself freely. Don't confine yourself to thinking that I only want to get into a bank. I just want to have a 6-digit, 7-digit salary, right? Even if it's unconventional, express yourself, right? Do not get stereotyped in because of the competition. And let me tell you guys, I passed out in 2002, .com bubble happened. Nobody came to the campus. The first company, I wanted to be a banker. The first company who came to campus was ACC Cement. And I got selected. And they thought that I'm a Sardar. They posted me in Punjab. And I had no correlation with Punjab. I am from Madhya Pradesh. I could not even speak Punjabi properly at that point of time. And I had to wait for 2 years because the economy only started stabilizing in 2004. And there were so many people, who got great jobs, but it all averages out. Life is a marathon, right? It's not a sprint. It's not about how much you are making for next 1 year, 2 year, 3 year. Man mein nahi hai to mat karna. If you want to take some risk, in our time there were no opportunities. I mean, today venture capital is available. Banks are more, people are happy to give you breaks, right? Make you work as quasi entrepreneurs. And I repeat myself, express yourself, right? Take this time to express yourself. Don't be confined and stereotyped that day zero aega, I need to get a job offer in hand. It might give you a confidence, right? No, but I'm saying just access yourself. Also, whatever sectors you like, textbook में बहुत कुछ नहीं मिलेगा. ये हमारा system ना, I'm sorry, director साहब is here, but a lot of it is redundant for the modern age requirement. So you need to marry that. What you know, see, you need to. How many of you seen Philip Kotler? I'm hoping everybody would have studied. What's the first page of Philip Kotler? Can anybody tell me? What does the book say when you open Philip Kotler? What the first page says? हाँ? आपने नहीं पढ़ी, सब chapters पढ़ते रहते हो ना? उसका essence है, you know, the first line it says, everybody lives by selling something. Right? So that's the crux of it. Make yourself so good. You know, whether you're selling financial products or you're selling yourself, if you're a YouTube influencer, or you're selling a physical product, everybody lives by selling something. Right? So identify that trait in you, what you're good at, what you will be able to sell better, and do that, and read annual reports. Right? Whatever sector you are interested in. Right? You like paints, for example. Asian Paints annual report pado. Anybody wants to get into technology, IT, software, right? Right? There is a TCS ka ek report hai, exploring for future innovation. Last year ka annual report hai, right? Infosys ka ek report hai, One Infosys. It talks about the opportunity in cloud. Once you read that, you know, trust me, guys, whatever you have learned, you would forget that. If you want to work in rural areas, you want to go into FMCG, right? Fast moving consumer goods, read the HUL annual report. But उस report में एक management guidance होता है report के शुरू में, which is just a 4-5 page of what HUL thinks about. See, they understand rural market better than most of us, right? To read those. What it will give you is, it will give you a practical perspective of what organization is thinking. Because annual report में storytelling नहीं होती है. Annual reporting में उसके numbers होते हैं और वो क्या करना चाहता है आगे, उसका roadmap होता है. Right? So start reading that. Read about, if you're focused on chemistry, read about, there's a company called PI Industries, right? It's into agrochemicals. Just read about it on what is happening in the agrochemical space in India. I mean, you will mesmerize with what the innovation India is trying to do in agriculture, right? So read that, and next time you read that, you remember me that there was so much of value addition in other than the books you are doing. Thank you so much. Have a good day.
Thank you very much for the insightful session, sir.
Our next speaker is Mr. Nitin Shahi. Mr. Nitin Shahi holds an MBA degree and a Chartered Financial Planner degree and has more than 23 years of experience in the stockbroking and fund management space. Mr. Shahi is the Executive Director of FinDoc Financial Services. He is also an advisory committee member to the National Commodities and Derivatives Exchange Limited and the Bombay Stock Exchange. His previous designation was that of a Senior Vice President at Master Trust, India. Mr. Shahi is passionate about spreading awareness regarding investment and trading as well. Today, he will be talking to us about quantitative trading and the global markets. We would like to invite sir over to the stage.
We set up the slides. Which two you can use this to change the slides?
Good evening, everybody. So, Joydeep ji, Gurmeet ji has set the tone, and the sense of time is 15 minutes only. So, I would try and confine it within 15 minutes. Just to start, let me introduce myself. Designations, whatever, has nothing to do with a person's trade. I would like to be called as a quant algo trader, as simple as that. And I could find few investors in this scene while Gurmeet ji was sharing his presentation or his thoughts. So, and very rightfully, very beautifully, and in a very good exemplary form, Gurmeet ji has shared his thoughts, and Joydeep ji was full of numbers. I can't recall these numbers. I have to always go to my Excel and find a lot of number. Though all my trades are data backed and quant backed. That is all. So I would love to start with world as a global financial village. Why in the envisioning the golden decade of Indian economy, I am saying world as a global financial village. Why I have picked this topic is because Atmanirbhar Bharat, Gurmeet ji shared, there is one more theme and vision of Government of India, that since we are amongst the largest consumers of the world, till date, we are price takers. We import a lot of gold. We are a very large consumer of crude. Even then, we take prices across the world. We need to go to NAMEX to understand what is the price, what should be the price of gold, crude in India or petrol in India. In addition to the taxes that government imposes, that too because of all those capital expenditures and everything that Jaydeep ji shared, or the gold. We import gold, but we import gold and then we refer to the imported numbers. So that is the importance of why India, or why we should consider world as a global financial village, and what India is doing towards being a price maker rather than being a price taker. So world as a global financial village, because we do access international markets. Right now also we are accessing international markets for n number of reasons. Every day, all the traders, all the investors who wake up, go and visit sites like investing or n number of other sites, which gives you insight how Singapore is doing right now, how Japan has opened, how Hang Seng is doing, what was the close of US markets, and then we refer to SGX Nifty. Then we start our day as a trader. I'm not sure how many of you are trading right now because you are too young, but you can definitely form a career out of it for sure. And it is pure numbers. Anybody who can understand numbers can refer to quant trading. So we are already assessing international markets to understand our trade today or how to invest in the current scenario. We reduce spending by achieving economies of scale, because I was talking to Jaydeep ji or Gurmeet ji or sir that I sleep around 12 a.m. and wake up at 4:30 a.m. because by 12 a.m. Indian market stops, by 4:30 a.m. Japanese market start. So, and I again sleep at 6 a.m., 5:30, 6 a.m. Again I sleep and wake up at 8ish. That is another story. I just set my tone for the day. That is how, now what I'm doing. All my team, myself, we are using the same engine to trade for Indian market as well as for the markets abroad. I am bringing in the economies of scale, diversifying my risk. If I'm invested in India, I'm invested abroad as well. If I'm taking so many calls to trade in India by cues from outside market, and I'm making so many trades outside India because of Indian markets, because I'm a quant trader. Then profit margins do not limit to one asset class. Obviously, when you have different asset classes, by the way, what is the number of the number that FPIs have invested in India? Any guesses? It is around $6 billion US. So that is why it is important to seek advice or seek the numbers of the FPIs who are investing in India to understand Indian trade. Now, Indian government has allowed to invest outside Indian markets through LRS, Liberalized Remittance Scheme, and we can invest $2.5 lakh per financial year per member outside India. And the number last year has grown from $7 billion to $19.6 billion. Indians have invested this much number outside India. Where are we investing outside India? These are stocks and bonds, real estate, foreign exchange, commodities, and derivatives. So commodities, I've already shared with you. Okay. The largest commodities where we are investing is crude and gold. The second largest number is stocks and bonds. Third is obviously foreign exchange is one of the, because when we trade outside India, we are to trade through foreign exchanges only, but to hedge those commodity and currency risks, we need to use derivatives as well. So what I mean to say, that there is a huge, large scope of investing, trading outside India and take cues from outside India. Why it has now become more and more important? Because we are consuming on a daily basis, either in commodities or otherwise, and we are not the price setters. So for that, Indian government came up with a concept of GIFT, that is an International Financial Service Center in India. And there are two major exchanges have already opened a international arm, NSE and BSE. So sitting in India, you can trade or invest in stocks, all the FANG stocks, 50 stocks of US, sitting in India, though it is through LRS, but you actually don't need to go outside. Plus, you got today, as on date, you got international brokers, but now you can get exposures from brokers within India as well. Second, this center is now becoming an international zone like Dubai, Singapore, Mauritius, or few acknowledged trade centers of the world. So what will happen over a period of time in say 5 years, 7 years, 10 years down the line? Now, Singapore Nifty, I have just referred SGX. Now the servers are being shifted to India for SGX Nifty. That means we are going to set the tone, set the price for at least for Indian indices, which is Nifty, sitting in India. Same way, when we are consumers of gold and taking prices from price cues from abroad, now we can settle in India, sitting in India, and a gold exchange has already been set in IFSC center. That means the prices 5 years down the line, 2 years down the line would be settled in India. That means we would not be referring to prices of USA for these settlement, international settlements. One major leap that Indian government could take during Ukraine-Russia war was settling crude outside the US dollar terms directly through Russia. So that means there is a thought process that we need to challenge the status quo, which has been challenged by India, at least for the first time. I just referred for the gold exchange. Now this used to be the international gold price multiplied by USD and then converted to conversion price into India was the troy ounce to gram conversion. Now India has changed for MCX. The prices now are referred to for are the prices based out of Ahmedabad. This was the formula for trading on MCX earlier. Now it is Ahmedabad based price. And for gold exchange, it would be settled in India at Indian prices, though the settlement would be done in dollars as on date, but the prices would be settled in India only. Now, what this will give to all of us as investors or traders, this will give us, all of us, an arbitrage opportunity. Arbitrage basically is price differences between two markets. So, for example, you are setting, what we try to do when anybody of us wants to buy a iPhone. Sitting in Ghaziabad, we try matching the price with two vendors. Anybody who gives a better discount, we buy that iPhone or whatever from that vendor. Same way, when we need to trade in the equity markets through quants, we try and make out the difference, if there is any difference available in two different markets. For example, difference in Nifty per se vis-a-vis Singapore Nifty, difference in gold price vis-a-vis prices settled in US terms, or difference of crude, which are NYMEX based crudes vis-a-vis MCX traded crude, which is also NYMEX based crude. If there is any difference, and these differences do have, they are actually in the system, we can trade those differences. So, well, when we try and understand that what is a quant trade, it is just to start with, it can be a small difference between two markets, which can be an arbitrage opportunity. This is created because of basis, because of biases, because of probability of movement of because we keep on tracking those prices, they are the leaders, we chase those prices. So that may be because of inefficiency of market. So arbitrage opportunities do exist in the Indian terms or internationally as well. So we get arbitrage opportunities, and with the number of markets developing, specifically due to IFSC or because of this global opportunity, we get a fair amount of bandwidth, or maybe we can enhance our returns trading these arbitrage opportunities. For example, I have just shared an example of crude. So NYMEX rate multiplied by USD is price of MCX, and it is the price of NYMEX trade as well. If we find any difference between these two markets, we can directly trade into the markets using different vendors, different brokers, and softwares. And this is all a quant trade. To sum up, I can say that if you go global, you will find n number of opportunities. The biases that you have in India are reduced because of number of products and opportunities available. The probability of doing good trade or risk-free trades increases. You may take risks as well abroad, but probability of reducing your risk increases, and the tone that the government wants to set to be a price taker, setter, rather than being a price taker, is the next step ahead. The way Gurmeet ji was referring, he referred to 4 theories. This is yet another theory that this government wants to come up with, and I think that this will be a very good trading or investment opportunity, which will be available over next decade, because India is opening up and all the global challenges that we used to be afraid of are now being part of Indian global financial forums. With this, I would like to thank everybody. Thank you very much.
Thank you for the insightful address, sir. Thank you to all our speakers for their thought-provoking words. I'm sure all of us have been able to develop a new perspective on these topics.
I would now request all of our esteemed speakers to come up on stage so that we can commence with the panel discussion. A deep dive into the budget from a multifaceted approach is essential to understand the future prospects of an economy. The panel discussion will be a thorough analysis of the budget for this year with a discussion by the panelists, which will be moderated by Professor Sandhu. I would now like to introduce Professor Sandhu to the audience. Sir has completed more than 18 years in the area of banking and financial services, 16 years of which were with the Standard Chartered Bank. During his tenure with Standard Chartered, Sir was a part of the leadership team for wealth management, branch banking, foreign exchange, and wealth lending. He was also a part of the global management group, which drives investment strategies for the investors. Professor Sandhu has completed his PhD from IIM Indore and has presented papers at various academic conferences and published research papers in multiple reputed peer-reviewed journals. Some of his research interests include behavioral finance, investments, and financial service regulations. We would now request Professor Sandhu to commence the panel discussion. Over to you, sir.
Right. Thank you. So I would first like to thank all the esteemed panelists for wonderful insights. So let me start directly with with the budget first. I think it was presented, but it was a very all-rounded budget. So the first question was because this is the last budget for the government in this year, and then obviously the fresh government will present the budget. And many market participants were expecting that it would be a populist budget. So I just want you to know your first thoughts. Was it a populist budget? What is it? A well-calculated budget that covered all the sectors and set India for a long-term growth story. So it is open to all the panelists. Gurmeet, you could start. Yeah.
Audible? Yeah. So, see, I think budget is nothing but as per Constitution, 112, I think is the section, if my memory serves me right. It's just an annual financial statement. It's a estimation of your expense and revenue. So one is the quant side of the budget, which we discussed in detail. One is the intent side of the budget. Okay. So I think quant side, they did well. Joydeep pointed out that, and we discussed this, that they're spending more, okay, which will lead to more job creation, more opportunities. They're also balanced it well by giving you more in your hands to spend by rationalizing the tax. In fact, even for super rich, mind you, last year, 185,000 people left India in the top slab. So somewhere, it was hurting us that we are paying 42.7% tax, and somehow that social security net, which let's say the West has, is still missing in India. So they addressed the top end also, and this could have been quite controversial. And one thing which I like about this budget is they could have afforded to be, there are 8 state elections this year. You have Karnataka, And this year, then you have Rajasthan, MP, and there's some very large states. And next year, you get into a budget. So I think not giving to that temptation of being populist itself is a huge intent statement. And because what you're doing on capex, the results will come in few years. So you're also thinking long term. So which also tells you the government is here thinking of a vision. So budget is reflecting that intent. So this was very positive. Second, one thing which has bothered India for last 2 years is this exit of FII money, right? And there are various reasons for it, right? Other markets could be cheap, and we have our own problems to share. One thing they are doing very well, and which I actually forgot to cover, is the emphasis they are giving on Gift City. So Gift City, people are not aware, it's our answer to the world of having an international financial service center, IFSC bolte hain usse, right? So the government is saying that if you do a foreign bank now, that if you set up an office in Gift City and you issue participatory notes, to make it simple for you, participatory notes is nothing but a derivative instrument which Sir was covering, where the underlying could be Infosys or Nifty or any Indian equity. So if I am a foreign investor, and if I open an account with a foreign bank in Gandhinagar, Gift City, and I trade in Indian equity through a derivative instrument, there will be no capital gain.
Correct.
Now at this peak, this was 4 lakh crores before SEBI did a partial ban on P notes. Currently, this position is only 90,000 crores. So basically they are saying, don't go through Mauritius, don't go through Cayman Island, don't go through Panama, all those tax havens. India is now trying to set up. So a lot of foreigners, he was pointing out, they look at SGX Nifty, they trade in Japan. They are saying that a lot of trading in India, on India, happens outside India. आप SGX Nifty से करते हो, ADR से करते हो, GDR से करते हो. He said, you come to Gift City, do it here, right? Which means that from an international perspective, just to further that point, I think they're trying to do it. So I think it's a great budget. Unfortunately, that news on a particular business group came that day. We got worried. I personally think this was Nirmala Sitharaman's best budget.
Yeah, I also think so. Yeah.
Short and simple. No politics here, no such intention. But to put it bluntly, there was no reverie, if you know what I mean. So what I'm trying to say is, if you look at the entire reform process, all the hard measures, DEMON, RERA, GST, ECHRN and all those things, if they're taking hard measures, which builds capacities, this 10 lakh crore, the number which we discussed, includes so many things. So basically, if you are taking hard measures and creating capacities for the future, you are building the nation, you are not being populist.
And additionally, the way Nirmala Sitharaman ji, there were a lot of expectations. A number of things would happen for the personal finance. ATC would increase, this would increase, that would increase, standard direction. But nothing was changed. Specific mentions were there for taxation on budgets for the FPI money, for taxation on the trust. To bring in FPI money, that was not at all even mentioned. So all the hard steps which were to be taken for the growth of the country were taken. It was not at all a populist budget. It was, rightly said, it is one of the best budgets of Sitharaman. Rather, after 1992. The way Manmohan Singh came up with a liberalized scheme, and the way it is said, it is a budget for next 25 years. If not for 25 years, surely it will take care of next 10 years of the thought process or the growth of the country.
Okay. So I think one of the things that I think the finance minister is talking about is structural growth, and she has been repeatedly in the budget speech also talk about long-term structural growth, which I think it's quite refreshing to see from a finance minister talking about something. And second, I think one bigger aspect which is talking about, and the globally they're talking about, and our commitment to the world as well, is on the cleaner and greener energy and how to finance it as well. We had the first bonds also recently allocated. And second is the focus on agriculture. So if you just kind of put all these things together, do you see a story building up?
So I personally think that energy transition is one of the biggest challenge and opportunities. I deliberately did not cover energy because there's so much happening there in such a wide space that it would have probably needed another full session there. But I'll tell you what India is doing here. So government, what it is trying to do is that they understand that we cannot become a 100% EV economy. Correct. No, it will take time to get the charging infrastructure right. So if you see, they are making a hybrid approach to it. The first approach is get ethanol mixed with petrol. Correct. So all of you know ethanol is a byproduct when you crush sugar, right? And now India has come up with a second generation ethanol, which means you can make ethanol from any kind of food grain, which is soya bean or whatever, all kinds of food grain, which is called 2G ethanol. Now they are saying make it 20% to ethanol. So it was 2030, they wanted 20% blending. Now they're saying 2025 do that blending. And this serves two purposes. It cleans the fuel. Second, it addresses your sugar sector, which has been a Bimaru sector for us, right? So sugar sells for 30 rupees a kg. Ethanol sells for 55 rupees a liter. Sugar ka payment 6 mahine baad aata hai, right? Government say. Ethanol payment will be done by IOC or BPCL in like, so it solves your working capital issue, solves your subsidy issue over a long run. So it's a clean fuel. The second focus is on compressed biogas. They removed the excise custom of 2.5% on compressed biogas, which again, they want to get the rural economy involved. That's where the compressed biogas is integrated eventually with the national gas grid, right? So that's the second measure there. Third, they are saying we want to focus on hydrogen. So we'll have the first hydrogen powered train. We're talking about hydrogen buses. Hydrogen is also the most easier way to produce because pani se banta hai. So there are various processes of making hydrogen. You split water, electrolyze it. But hydrogen problem is difficult to handle. It's very volatile. Correct. So you need to get a infrastructure to manage hydrogen. So you see L&T, Reliance, Adani, NTPC doing hydrogen. Hydrogen probably will come in 2030. And then it's this solar panels, solar energy. So what India is trying to do is it realizes that one tech, we don't know what it will be, right? So you're in a stage where everything is getting disrupted. So you're taking a very composite approach that my rural economy also should catch up. I should at the same time have a carbon print goal. And I think this is one of the most fascinating spaces, in fact, and India is leading in a lot of these sectors. In fact, I met somebody in Boston in my visit to US, somebody from Bloom Energy. They're into, again, electrolyzers and hydrogen. I think they had such good words to say on, and we are now exporting ethanol to so many countries. Solar panels, we are doing a great job. I mean, if you go to Delhi and see the EV charging structure, so parallelly, I think we are trying to build an ecosystem and saying flexible. I think that's the key here. Do not get carried away that, this is the technology, right? So we are saying, okay, let me, see my capacity as a nation and build around.
So when we say that they did mention what is the theme. So a theme set for a period till 2070. Well, the sort of vision they have been able to deliver in the budget, that we should go this way, but we can go slow by slow. It is not we can turn it on tomorrow. It is not a turnkey project. So, but definitely they have set a theme for this. And the beauty of this government for last 10 years have been, they come up with a project, they try and dwell on it, then they come full on it. So, may it be Clean Bharat, may it be Atmanirbhar Bharat, whatever, or maybe now this is yet another theme, and I'm glad that they came up with this sort of theme. And the sort of PPP they are open for was also, otherwise most of the time it happens that government takes, I will do it. So the theme of this government had always been PPP, public-private partnerships, and they again opened up this segment as well for PPP. So that means they want people, they want youth to be entrepreneurial for it. So I actually liked it, and yes, they have set a theme for it.
Thank you. To add one small point, there is one Western version or Western interpretation of green. If you look at data, if you look at history, carbon, they would pollute. and they would preach other countries in the world. Okay, we are part of COP, we have those targets, zero comeback, so and so date, and all those things are there. So we are one version of that. Other is on the ground, real, what matters for India, as Gurmeet said, ethanol, biogas, and all these things. Now, say for example, batteries. Yes, batteries will happen. We will have EVs going ahead. But the point is, you make a battery, you charge the battery on what? On electricity. Now, if that is thermal, it doesn't really help. Only if you have the real hydel or solar or whatever you have, if that is this thing, carbon footprint, that actually helps. So we have to distinguish between the Western version of green and actually what matters for us, our version of green.
Adding like,
Yep.
taking from that they once they say we need to go lithium way, then they will reduce the customs for the import of those lithium batteries, allowing them to sell lithium. Well, that adds on to the intent of the government that they actually want to do it, and they actually want to do corporatize it.
Thank you. Thank you. So one of the things that struck me was the fiscal prudence management of the government, and they have given a clear, and this is specifically to you, Joy, on the fixed income side. A lot of investors because majority of the investors look at fixed income as the only option, and equity to be a little smaller option, is that government has stuck to a fiscal path. So what are your views that how will it impact for next 1 or 2 years, the way the government is borrowing, and currently the way the yield curve is, and where you see an opportunity on the longer end or on the shorter end of the yield curve, or investors should look at credit as one of the opportunities to invest, looking at what the government has in calendar for borrowing. Yeah.
Okay, just to give a bit of history as to what is this deficit. FRBM came, I think, 2003, if I recall correctly, the target of 2.5% GDP. It became 3% of GDP somewhere down the line. So what is the history? We had a kind of high fiscal deficit. FRBM was passed. We were bringing it down. Then 2008 happened. So obviously the government had to spend more. Fiscal deficit shot up. Again, it was improving. Again, this thing happened. 2020 happened. So again, the government had to spend more. So gradually it's come down again. The target is given 9.2 FY21, 6.4 current year, 5.9. Target immediately, the glide path is 4.5% by FY26 and 3% over the longer term. Current year, 6.4 is easily done because there is something happening here. We have a higher nominal GDP. So what is likely this year is the government will actually overshoot the budget deficit. Instead of 16.3 lakh crore, it will be like 16.7, 16.8, 16.9 lakh crore. They will actually overshoot. Even then, optically, we may have a lower fiscal deficit, like 6.4 becomes 6.3 or 6.2 because the base, the GDP is higher. Next year, 5.9 is achievable. Now, 4.5 is a bit of a stretch. The reason is arithmetically, 5.9 to 4.5, if you divide that by 2 becomes, I think, 70 basis points per year, which may happen maybe a little bit here and there. That is broadly achievable. But if you look at it, the quality of the deficit is improving like we discussed. Government spending more on capex, so not much of a worry there. GDP is increasing and our per capita income also is improving. That is the big P for the rating agencies. 2300 now in terms of per capita GDP, 2300 USD, it will become 5,000 in next few years. And it will become 10,000 in next few years. That is not the issue. Now, coming to the yield curve, what is happening now is the yield curve is very flat. So to give a brief example, you get 1 year bank CD like about 7.7%, 7.6%. You get 1 year HDFC bond around those levels, only 7.8%. You get 10-year HDFC around those levels only. So the yield curve is very flat. If you look at G-Secs, 1 year T-bill around 770, 10-year G-Sec, thereabouts only maybe actually a little bit lower. The curve is very, very flat. So to the question as to what the investor should do, it is a function of your investment horizon. Don't take a duration call now, you won't benefit from there. There is no kick, there is no incentive for the duration call. Stick to your investment goal, your horizon, and what you want to do with your money. From the FPI perspective, what is happening here is somehow whatever, they have their own priorities and all those things. They perceive us as whatever, not what we are really worth. So if you look at the breakup and the holding of FIIs in our debt, FII investment in our GSEC so much and the outstanding quantum, it is less than 2%. And if you look at corporate bond, maybe a little higher, 3-4% or thereabouts. So the FI holding in our debt is anyways less. It is mostly domestic driven, which is actually good. Like if equity, we had those issues of FI selling and all those things, which won't really happen to that extent in debt market. What was the other part, sir? I missed the other part of your query.
So what should the investor do? Which I think should they look at the shorter end of the yield curve or longer end of the yield curve?
Yeah. So from the investor's point of view, given that there is no kick in long duration, if your horizon is 1 year, invest 1 year. If horizon is 3 year, invest 3 year, and so on and so forth. What I'm basically trying to say is, people ask me, should we take a duration call, as in like buy 10 year and benefit from that? So right now, that which is not there. Why people ask this is the view is when they'll hike one more time, 25 basis point, maybe six quarter becomes 6 or thereabouts, they will pause and then they will cut rates. And that is the thing people ask, that if I buy 10 year now, and if the cut rates after whatever, 9 months or 12 months, I can benefit from that. Maybe arguably, yes, but wait for that. Let the pause happen first, let inflation come down, and then you may time your duration at that point of time. But right now, you match your investment horizon and the duration accordingly.
So one more thing, obvious question is, a lot of people are thinking of, are we at the peak of the interest rates? That's the...
Okay, let me break it up. Multiple things here, global and India. So globally, if we break it up country-wise, US, we have like 4.5, 4.75 now. Now here, there's a dichotomy what the US Fed officially says in terms of what is called dot plot. The thing is called SEP, Summary of Economic Projections. What they're officially saying through that SEP or the dot plot and what the market is perceiving, there's a big dichotomy. Officially, they are saying they will hike and they'll keep on hiking. It will become like 5.1% by December. So 5 quarters is the range which they are giving for December. Now, if you look at the market view, what is the market view, by the way? The market view is compiled by Bloomberg from US Fed Funds futures. Market view says second half of the current calendar year, they will actually cut rates. Big difference there. And the market says the US rate will be like around 4.3% by December or January next year. So 5.1 Fed official view, and the market saying they will actually cut maybe 4.3 or thereabouts by December, January next year. That's the US. In the Eurozone, they hiked recently. The rate is now 2.5% in ECB. So they'll hike for some more time. Now, one issue with all these countries is that they have a huge debt pile, which are the numbers on the screen. And the lecture us anyway, the different issue. They have a huge debt pile. What it means is higher the interest rate, it will be that much of an incremental burden on them to service that debt. But inflation being so high, they can't really help. US inflation touched 9.1%. Now it's like 6.5%, easing, but still somewhat better. Eurozone, it was double digit, now within single digit, but still on the higher side. So they are under kind of compulsion to hike rates. So the Eurozone will kind of hike for some more time. Now come to China. China is a whatever. So they were in lockdown for some time. Inflation was very low. And China is the only country in the world to have actually cut rates. Negligible, minor, 50 basis point. But still, China is the only country that cut rates. They're opening up now. Inflation will move up. Their growth will improve. Commodity markets will improve. But they may look at rate hikes if required. Not sure at this point in time. Other major country is Japan. Now, Japan, what happened is they increased their tolerance band. Tolerance band meaning they have a band or target band for 10-year G-Sec yield. It was 0 to quarter, sometime now it is 0.5%. So this enhancement of the tolerance band for 10-year Japanese government bond yield is being perceived by the market as saying that they may hike rates. So if that happens, it is now minus 0.1%. Japan may hike to maybe plus 0.2% or thereabouts. That's the global scenario. Now coming to our India. Wednesday, we have the meeting. It is now 6th quarter. The broad view is they will hike one last time. 6th quarter will become 6.5. Then they will pause for maybe 9 months or 12 months thereafter. And then they will cut rates. Now, what is the basis for saying this thing? Inflation. So look at inflation. Inflation in April last year was 7.79%. December was 5.72%. Inflation is easing. The target for RBI is this quarter, Jan-March, target is 5.8%. And quarter after that, that is April-June, the target is 5%. So inflation is easing, lots of positive, high base effect, crude price stable, food production good. So inflation will ease. So RBI won't increase as much. And if you look at those real rates, RBI repo rate 6th quarter, inflation 5.72 becoming 5%. So on the administrative rates were kind of done with the rate hike cycle, at least in India.
Thank you. I think Gurmeet, the next question is you. The obvious one for you is on equities. How do you see Indian equities going forward? There was a concern on valuations. Then we saw Russia-Ukraine crisis. There was a dip in valuation. Obviously, the market came back, but we are at the same levels. We are for 60 last year, and this year is well 60. Still trading at about 20 multiple if you look at the quarter. And what kind of style, growth versus value, that has been debate for last year as well. Value did well, growth never did well.
Sure.
So what's your view on sectors as well overall?
I'll tell you something that the short answer is I don't know. And a lot of people are not honest enough to admit this. But I'll tell you something. When I did 2002, my MBA, .com bubble happened. 2004, Vajpayee government, 2003, Vajpayee government lost election. Market ko 3 din lower circuit laga. 2006 was Asian financial market crisis. Sensex fell from 12 to 8,000. 2008 was Lehman crisis. Sensex fell from 21 to 8,000. 2011 was pigs economy. Right? Portugal, Italy, Greece on the verge of default. 2013 Fed taper. Rupee crashed from 53 to 68. 2015-16 demonetization. 2018 long-term capital gain. 2020 COVID. 2022 Russia-Ukraine war. And despite all of this, Sensex has become 3,000 ka 60,000. So dips are temporary, growth is permanent, right? And whenever you have seen a period of 2 years of lull, again going back 2000 to 2002, then 2000 to 3-7, correct, right? And 2009 to 11-12, nothing happened. Then Modi ji came in 2014 and right, demon, nothing happened. COVID market dip. So what I'm trying to make is that India will continue to grow. Our nominal GDP growth, see, we say Sensex became 100 to 60,000. 600x. लोग फिर भी पूछते हैं मार्केट का क्या लगता है, right? अभी 600 गुना हो गया, फिर भी पूछते हैं क्या लगता है. Problem is the returns don't come linearly. So last 40-year return is 13%, but there are only 2 years when it is 13%. So either it is plus, either it is minus. So if you look at a block of 5-6 years, I think the biggest risk is not owning India, right? And now let me give you the valuation picture. So we say our Nifty trailing P is 20 and our forward P is 17, right? This is what we are saying. Our 10-year average forward is 17, right? So Bombay में एक कहावत है, if anybody has been to Bombay, धारा भी है, pedder road है. जो अच्छी चीज है वो महंगी होगी, right? As simple as that. So this is a stock market balance. So my sense is that, coming to more quantitative answer, is that we will be hitting from 3 trillion to about 7.5 trillion by 2030. Right? That's the IMF goal. I'm not even talking about what the government is saying, which means your economy will go up roughly about 2.5-3 times. Assuming 1:1 market cap to GDP, which is the Warren Buffett indicator, right, which is a fair value of the economy, your market should be 2.5-3 times in next 7 years, which means that had I told you 10 years back, Sensex will be 60,000, it was 20, you would have laughed at me. So today I tell you that the 60 can become 1.5 lakh, you will still laugh at me. The return here I'm assuming is around 12%, which is our nominal growth. So in the long run, India growth on larger indices is a function very close to the nominal growth and earnings growth. Now let me give you another data. People say China is a great market. People say US has created wealth. I'll give you hard data now. Last 10 years, the number of 10 baggers in India, stocks which have become 10 times. I'm not talking about 50, 100 times. In NSE 500, which is 500 top one, is 20%. 20% of our stocks in the index have become 10 baggers. This number is 4% for China. This number is 8% for NASDAQ. So India, there is opportunities, which is stock picking, which is bottom, right? So my view is that if you're not in equities, that is the biggest risk over the next 6-7 years.
Gurmeet, any sectors that you think that would propel this growth?
Yeah, so I think one clear winner, Arjimran, is banking. If you see the credit growth is averaging 17-18%. ये 10 साल बाद आया है. So I've not seen credit growth at 17-18% despite this. And nobody will just take loan just because I have to take loan. Na? I will take loan if I have to buy a car. From a corporate, I will take a loan if I have to, do capex. I have to go on a holiday. I'll take. So the loan is for actual purpose, consumption, production, etc. Right? So bank credit growth being 17-18% typically spells that the EPS growth is. So I think in the near term banks, in the medium to long term, as I said, manufacturing, very, very bullish. I think this decade would be one of the best. Now I'll give you one perspective which will bamboozle you. FIs have pulled out $50 billion in last 2 years. Despite that, Nifty is 17,800. COVID, they pulled out $6 billion. We fell from 12,000 to 7,500. 2008, Lehman crisis, they pulled $35 billion. We went down from 21 to 8. So there is strength. And there is a rule in finance. Anything which falls less will go up the more. At some point of time, they will come. Now, I'll give you the last perspective. So we will hit $7.5 trillion by 2030. Coming back to my original point, we as a country save 18%. Right? We are a land of savers, right? So 18% of $7.5 trillion roughly is about 1 trillion. Correct. Right? Roughly is about 1 trillion. Abhi 6% equity mein aata hai. Every 100 rupees India saves, 6 rupee comes into equity. Let's say this goes up to 10%. मैं बोल ही नहीं रहा हूं ज़्यादा. $100 billion will come from domestic savings in India. Now, it may happen, the market may not give you any returns for next few months, couple of years. It may give you negative returns. So be happy. Unfortunately, this is the only place जब sale लगती है तो भाग जाते हैं.
Correct. Thank you. Nitin, one obvious question given your expertise in commodities. What do you think about commodities? Commodities have been on a bullish trend. Some of the things. So what is your overall view about commodities what do you think in next 1 or 2 years? I know it's a very short period, but still with your expertise, what do you think?
So commodities per se, we should divide it in two parts. One is agri commodities,
Yes.
Second is non-agri commodities. Agri commodities, though I'm very sure they are into revamping after this Ukraine-Russia war. Everybody is now aware of what food means, food particles means, what crops means, what fertilizers means. So we've been discussing fertilizers, impact of fertilizers, impact of food, or even on Indian economy, which is food basket for the world. Most of the world, a lot of food items are exported out of India. So as far as agri commodities are concerned, I'm very sure that it is gonna be a different ball game for whole of the world. And when I say it is for whole of the world, India is gonna gain out of it a lot, barring Russia, Ukraine also. But India is gonna gain a lot out of it. As far as non-agri commodities are concerned, so there is a lot of demand for manufacturing side, lot of demand in the vehicle side. So that is a linear function of demand. Non-agri commodities, every non-agri commodity is a linear function of demand, and opening of COVID and demand increasing elsewhere, everywhere, that is making it grow like anything. So commodity as in whole is going to gain a lot of importance, maybe because of industrialization, maybe because of consumption, and it is now being considered as an asset class as well. Earlier, only bullions were considered as an asset class. Now we can see a lot of mutual funds, and even in India, which are commodity centric. So I'm sure that that is into a roller coaster right now, obviously, because every government wants to fight inflation for a shorter duration right now. But saying that, it is just the demand of all the commodities, and commodities being considered as an asset class. A lot of derivatives are being traded on commodities right now, which are making them even more and more familiar to the investor and the trader circle. Say, for example, I trade physical commodities, though I don't hold any industry, or I'm not an agri trader, but I trade more than 1,000 crores of physical commodity dealings per year, just for the sake of doing arbitrage or for the investment. I use commodity as an investment vehicle. So there are a lot of more traders who use it as an investment vehicle. So what I'm trying to tell you, it is being considered as an investment class or as an asset class. So the face of commodities is changing. Definitely it is changing. It is, even commodities are being digitalized in the form of demat commodities are being traded. EGRs are being created. Electronic gold receipts are being created. Now, once EGR has been introduced in, say, for example, in Indian market as well, I'm sure SGR is silver will also be receipt now for sure. And slowly and steadily, every commodity will be traded as a receipt now.
Yeah.
One point I wanted to add, and since he made that point, is that also, since you are young, do invest only what you understand, right? So somebody who's from a background of commodities will understand commodities well. I've been a banker, so I understand banks better. ये जो quick rich syndrome है ना, there is nothing called quick rich. If you are believing in WhatsApp tips to invest, you're not ready to invest. Investing is a full-time job. You have to research, you have to track balance sheets, you have to see the numbers, visit sites, consult experts, right? Do not fall for quick rich syndrome. Secondly, anything which is most fashionable is the most absurd investment. So crypto is the new dollar, right? Yes Bank is the next HDFC Bank, right? Jai next word aaya tha na, this is the next big thing. That means it's a crowded trade. The market is designed in a way to fool more people at the same point of time, right? So anything which is fashionable, anything which promises you that, that movie, Hera Pheri, 21 din mein paisa double.
Correct.
Never fall for it. If I know a multi-bagger, if I know that something is going to do well, do you think I'm going to come on Twitter and say that this is going to do well? Right? That's what I said. Nobody knows. And a lot of us don't know that we don't know.
We have 2 points. One is on the previous discussion on the growth point. Growth is compounding.
Correct.
Today we are like 3.5 trillion USD in terms of GDP. It took us like 60 years since independence for the first 1 trillion. Next 1 trillion maybe like 10 years or whatever. Next 1 trillion maybe 7 years or whatever. So now we are saying 3.5 trillion becoming 7.5 in the next 7 years. So there's a big compounding effect there. So growth is compounding. In fact, I think IMF have said this thing, over the next few years, half the global growth, meaning incremental global production, will come from China and India. That's the extent of our this thing. And the other point is, what he meant by fashionable and all these things is like to give a simple this thing. People investing more or trusting more on Ranveer Singh than the RBI governor. Remember those ads? Oh, Ranveer Singh acha bol diya, to acha hi hoga. So something is wrong there.
And look at these startups, see, market cap is not a measure of your success. The market cap to ek hafte mein Adani ka bhi ud gaya. So that is notional, right? So market, just because somebody has made a unicorn hasn't made him successful, right? So somebody is doing well in a job. I have friends who in HDFC Bank have ESOPs worth 40, 50 crores. They are as successful as somebody who's, let's say, started on his own. So the definition of success cannot be market cap that somebody has just created. And my advice to you is go back to textbook finance. If the company is not reporting earnings, if it doesn't have cash flows, right? And if the stock is going up, you should be worried. Question outperformance more than underperformance, right? In fact, if something is underperforming, right, and despite profits are going up, it's an opportunity, right? So ITC, I remember I used to make jokes on ITC for like good 3-4 years. You know, ITC is not moving. ITC, so because their profits were going up, the stock price was not going up, right? So that's an opportunity. Don't get disheartened by it. Similarly, 3 years people were making jokes on HDFC Bank. HDFC Bank profit went up from 18,000 crores to 36,000 crores. Stock price was not moving. And now suddenly when this entire crisis hit, that's the only bank which is, you know, so question that. And in a portfolio, you need a pant and you need a pujara. You need to defend and you need to attack. So everything should not be focused on that, you know, start with risk first, right? So since you guys are young, I wanted to, you know, so there is question outperformance. Somebody's asking, you know, saying, okay, you will make this much in this. But there's nobody needs to work now. Why are we, if I know everything, why am I managing people's money? Right? If I remember Reliance, Mukesh Ambani gave a AGM. He said, we will double Reliance enterprise value in 2027. Standing ovation. Right? Newspapers running articles, Reliance. 15% की तो बात कर रहा है. You are in 2022. He's saying, I will double in 2027. It is 15%. But we want to make 15% every month by buying Reliance. So can you make if it was that easy? I mean, he's investing thousands of crores, running a company. I mean, he would have also started trading. Right? So that's the only point I'm trying to make. Have reasonable expectations and match. Eventually, it will be the profit-led growth in share. If it's otherwise, exit.
Another point, since you said unicorn, I don't know what is unicorn because that $1 billion is valuation. Yeah. Somebody giving a valuation of $1 billion.
Correct, correct. See, in this same country, people want fancy ideas. If you tell them a HDFC Bank, which has a good free cash flow, or an Asian Paints, which has absolutely free cash flow, they said this is a boring trip. No, naya batao. So people don't understand free cash flow. I only understand free cash flow. I don't even understand net profit that way. Okay, my last question is if India is the next, this is the golden decade for India, any risk you feel, globally or India, that could derail this? This is for all.
I think the first risk is our bureaucrats. I think the only risk to India is India. You know, I remember one, without taking names, somebody said, investment gains are made without effort. Second, they constantly keep tinkering with taxes. You know, you want a stable taxation. Every year, if I'm a foreigner, every year you give me a new template. You know, this year, for example, they touched insurance. Then you have, you know, then they said they said something on angel tax. So I think this frequent tinkering with the tax lab and viewing new age businesses with suspicion. I think that bureaucracy needs to change because, you know, unfortunately, those guys have worked 20 years, 25 years as IAS, IPS, revenue officers. Suddenly, they think a 30-year-old guy is getting ESOPs. How is he making so much? So I think our bureaucrats are our only risk, which I think is there. The second risk, in my view, is that see, we've done very well as a nation in all adversity. You know, so there's a saying in English, you know, the storms make oak grow deeper roots, right? So jab tufan aata hai tab oak apni roots. So I think that is what is happening right now. We are strengthening our roots, right? And a lot of it is built in progress. We should not give up very quickly. People should not lose faith on India, even if there is, let's say, you know, nothing in the market for few months or years. Don't get disheartened. In fact, adversities have proven to be the best. And third thing is this oil. In the short run, the oil prices have to be because see that hydrogen will come in 2030. The ethanol blending is taking time. This oil is one variable if you can, and this affects the current account deficit, which, you know, he was
$70 is 70.
Dollar, मुझे लगता है कि I think the reverse might start. That's my personal view, that the way they are printing money, you know, you can't always print your money and get yourself out of it. So I think oil is something, if it remains reasonable, which in my view should remain reasonable, I think we are set for a very good decade. I personally think this is the best decade of India which is, this would be even better than 2003-7, not just because of the market. See, market is an outcome. Market is output of what is happening good, right, in the economy. No, I have not seen people in tier 3, 4 towns getting access to capital like this. I have not seen such kind of job creation in a different way. See, government is trying to now give you skills on coding, digital, digital marketing. Look at the Bal Vikas Yojana which they have, this Development India,
Correct.
the skill plan. The government is talking of coding and AI and all of that. Now it is up to us. See, problem in India is we are unemployable because our skill set do not match. Right? Most of the times, you speak to any company, you speak to any bank, अच्छे बंदे नहीं मिल रहे. Right? Because we are not coping up. And that's why I said that point when we were discussing, marry your practical skills with your academic skills. वो कहते हैं ना, ज्ञान and vigyan. The vigyan comes when you have the practical skills around it. So don't confine to the books you are learning here, whether it is MBA or graduate courses. Start marrying that practical knowledge also. And I think that's where I think the things will come.
I think not able to finding opportunities is one of the biggest stress. We or you specifically as youth need to understand that opportunities are always available in the market. May it be investing, may it be manufacturing, whatever. So whatever your passion is, one, you need to follow that. Second, opportunities are always available. It may be of a small nature, it may be of a bigger nature, it may be a unicorn, it may be whatever. So you need to explore those opportunities. And one more thing, that on the corporate governance side, there are a number of things that keep on happening that needs to be taken care of. But you need to try and understand the opportunities that are available in the market. For example, he shared just now coding. For example, Make in India. We are a trader. We don't manufacture anything. When Make in India came into being, today, as an organization, we export mobile phones out of India to rest of the world for 1,400 crores as of now. So that is an opportunity that we could find. Why? Because there is some sort of incentives available for the Make in India. So we are buying Make in India iPhones and selling outside India. And we just, it was just a smart move. It is just an opportunity that the economy gives, that government gives. Finding a small difference in the two markets was the basis. And then we came up with this sort of project in ourselves. He mentioned one housing finance company. So that was another. When you are able to understand an opportunity, you can make business out of it. You can think of developing your skill sets for that. For example, coding. Government said coding. That means there is an ample opportunity for the coding part. So all those guys who are sitting into this room should understand that coding, or maybe AI. I think AI or ML is more important than coding. Reason being, coding to aaj chat GPT bhi kar deta hai. But saying that, when somebody approaches me as a sir, I'm a coder, I ask him, can you trade? For me, trading is more important than coding, because again, rightly said, I have more coders or chat GPT, or there would be another AI tool that may come up with. For example, Google is also coming up with chat GPT sort of thing. So when you are able to understand AI or ML, or you find that opportunity per se, you would have better opportunities for your career growth. And one thing that I feel which is which may be risk, which is not within your control, is corporate governance, bureaucracy, maybe change in regulations. But corporate governance is one such thing that is not within control of anyone.
Yeah, on the basic question of risk, global and India. Firstly, on the global part, there is a remote possibility of a risk there. Forget the recession. It may happen, may not happen, maybe a mild one. In fact, that is the more bigger likelihood because if you look at US, they had 2 quarters of negative GDP growth, technical recession. Then they had 2 quarters of positive growth. So not so much of this thing. In the Eurozone, they said because of this Russia-Europe thing and no export of gas by Russia and all those things, Batti Bujag and all those things. Now they have a warmer winter. Things are not as bad. So the point I'm making is I don't see so much of a risk from that so-called recession, which is the favorite discussion nowadays. The bigger risk I see is if you look at the way things are going, the geopolitical tensions. Today, any country who is somebody, be it USA, be it China, be it Russia, be it India, be it whoever, any country who is somebody is trying to control some resource somewhere in some form or the other. US, they are always the big dada. China, the emerging big dada, they have their own tussles. Russia thought we are somebody, they are doing something. Even we, today, even we are a global force. Today, we are importing cheap oil from Russia. Obviously, US does not like it, but we are doing it. Today, we are talking of settling our trades in rupees. Today, we also have power. So the point is, just in case, I don't know when, or if at all, maybe 1 to 3 years down the line, if there is a flashpoint, and if all these big powers, be it USA, be it China, be it Japan, be it Russia, or even India, if some flashpoint happens, remote chance, that is the one global risk I see. In India, I don't see too much of a risk. So as long as we have reasonable political stability, and in case whoever is in power does not goof up, I'll give a different perspective. If you look at industrialists over the last multiple decades, if you look at the earlier generations, the next generation of Tata Birla, today's generation of, be it Adani, be it Ambani, or be it the startup generation, just think of it. Whatever industry has achieved over these decades, is it because of the government or is it in spite of the government? Government does, and the government does so much. Today, just think of it. What he is doing in commodities, what he is doing in financial services. Is it because of the government? You have to do it. So as long as there is reasonable political stability and the government does not go up big time, I don't see much of a risk and I see stability in India.
Thank you. So now I open up to the participants. Any questions? We'll take just 2 questions. Yeah, please. Can somebody pass a mic or something?
Good evening, sir. So while we are talking about the risks, what I feel in the budget that the foreign imported cars were taxed more from 60% to changed to 70%, and the withholding tax rate for FPIs have been increased from 5% to 20%. So do you feel that there could be a risk that since you are disincentivizing them to on a certain area to invest, we should build ourselves these things? So do you feel there could be a risk from foreign countries that they should stop trading with us or something like that? They would increase their tax rates for us?
Imposition of duties and taxes happens on an ongoing basis. So, and they get withdrawal also on an ongoing basis. So for example, on steel, we did impose anti-dumping duty when we were getting steel from China. Similarly, if you remember when we were taking oil from Russia, we imposed a windfall tax because that oil was getting processed by Reliance and ONGC. And because Russian crude is very heavy, Reliance and others were making a windfall gain on it. And now they've started. So this is on a dynamic basis done to address a particular segment. Even gold now, they've started to reduce the duties because, again, the smuggled. So I think this is done for, the equilibrium. I personally think auto is in a great cycle now. Reason being, we've had 3-4 very tough years in auto. So we had that BS6 transition. Then you had COVID-related disruption. Then the insurance cost went up because of the change in third-party motor pool guidance. And then the demand was low. So, so I was doing a number. Maruti actually sold more cars in 2019 than 2022, at least for the first 9 months. So I think we're coming out of that. Then there has been a shortage in chip. So, there's a huge waiting period. and all that. But one of my client is one of the largest dealers in Uttarakhand, in the top 3 dealers of car dealers. He's saying he's not seen this kind of propensity to spend in India in a very, very long time. So this movement is happening more towards SUVs and city multi-utility vehicles. I checked 13 new models which were launched in last 6 months, which were 5 from Mahindra, which is Thar, SUV 700. Then there is, that Kia bestseller. Then we checked Tata on the new Safari. The average waiting period has been 4 to 6 months, right? So what has happened is the discounts have disappeared. If I can only sell 100 cars a year and I have a demand for 500, I will not give any discount. Now the metal prices have also started coming down, which means my raw material cost will also come down. So I think auto is it for a good run. Jinka nahi sell ho raha hai, right? Wahan pe challenge hai. Similarly, auto ancillary mein challenge aayega, because if you move to EV, I may not need half of the components. 80% of the components may not be required. So you have to be careful there in terms of who's having more kit value per car. So for example, there is this company called Uno Minda, again Manesar based. It used to make horns and switches, central locking 5 years back. Today, these guys are making alloy wheels, they are making airbags, they are making car seats, they are making infotainment systems and panels, right? So here also, see, in every sector, whoever is adding value, that value could be content per car. If you're a telecom guy, are you giving 5G with more channels, right? If you're a steel guy, are you backwardly integrating, making specialty and alloy steels also, right? Also in car, you remember, we used to buy the lower end version. We were not very frugal. So हम नीचे वाला लेते थे और करोल बाग या कहीं से बाकी parts लगवा लेते थे. Now the biggest sale is on the top end cars. We want to express ourselves. I think post-COVID, people have decided, let's, amount of money not spent in the bank when you are dying is amount life less lived, right? So I think that change has happened after COVID, where we want to spend more. Look at airports. I think New Delhi airport is worse than Nizamuddin railway station right now in terms of the traffic. So this propensity to spend combined with premiumization, I think will drive all discretionary sectors well, whether it is auto, travel. I don't know if anybody saw Indian Hotels numbers last quarter. If you track market, Indian Hotel is this Taj property. They reported 400 crores of profit in a quarter, which they haven't ever reported ever in their last 20 years. पूरे साल में उतना profit नहीं कमाया जितना एक quarter में कमाया. And you just check any Taj property, just dial Taj Surajkund, you'll not get anything less than 20,000. And still it is full. So what is happening is people now want to spend, right? And that's the shift and that's why I said that the third theme I was highlighting is consumption. Our consumption is only going to get strong.
One more question. Yeah.
Yeah, good evening, sir. So since you talked about Divi's Laboratories and how they are basically outsourcing the manufacturing of the Molnupiravir component of the COVID drug. So,
Divi's, you said?
Yes, sir.
Okay.
So recently, since the COVID unrest has fallen down and the economies are returning back to normal, so the company has seen a shortfall in their sales when compared to that particular drug. So, sir, how do you see Divi's Laboratories being part of the pharma sector in India going forward, like from a business point of view, where they can generate the more?
You're asking us
not a stock
specific question.
So not from a stock recommendation, but from a business point of view.
Okay.
I never imagined you guys are tracking stocks. I'm very happy. See, that's what makes me very bullish on India, right? You're so young, about to work, and you're talking. So I tell you once, I can't answer a stock specific compliance season. But nobody knows that Divi's also went up from 500 to 5,500. See, हम क्या करते हैं ना 3 महीने का 6 महीने का रिटर्न देखते हैं. Laurus Lab went up from 70 to 700. But 700 से 350 आएगा तो तकलीफ. Right? So what I'm trying to say is see the trajectory. That's why I'm saying own businesses. Behave like an owner. Don't be a tenant. You're not, see, what are you doing when you're buying a share? You're the owner of the company. Does Mukesh Ambani get up every morning thinking that, should I sell my shares or not? So if you're buying a company, you are participating in its profit or loss, right? There will be good quarters, there will be bad quarters, right? It happens with everyone. हमारे दिन अच्छे खराब होते हैं. किसी दिन घर में झगड़ा होता है, किसी दिन नहीं होता है, right? So life is like that. In fact, straight line is when you should be worried. So everything is, your heartbeat is also fluctuating, right? You check your blood pressure 10 times in a day, you will get different readings, right? So volatility is the essence of equity and life, right? So what's happening in pharma in general, not Divi's in particular, is we overstaffed, our purchase of every house had 4 strips of Dolo, every house had 5 cup syrups. Everybody was a doctor, a year and a half back. So what we did was we overloaded our pantry on medicines, right? So unka sale skyrocketed. While Divi's doesn't make Dolo, I was just giving an example. Okay, so what happened? The sales went up suddenly after COVID, right? So you are now on a high base, right? Secondly, COVID disappeared. Divi's makes main API for COVID, which was contributing $200 million of sale every quarter on only Pavir alone. Similarly, there were others also. There were Laura's, there were, Aurobindo, others also. That also got disappeared. Third, the raw material cost went up. Your solvent prices, chemical prices, logistic cost, energy cost, right? If you get a chance, see a video on how fermentation happens in this space. So it's everything good to everything bad. It's a perfect cocktail of negative news. And that's why you're seeing a volatility, but pharma is a evergreen sector. आप खुश होगे, गम होगे, दवाई तो खानी पड़ेगी अगले, and these pharma companies are very smart, huh? You last 20 years, they have not figured out even one cure. So their focus is on containment. You have diabetes, take medicine. You have blood pressure, take medicine, right? You have thyroid, take medicine, right? So, so they believe in making you a client for life. Once you get a disease, you are a client for life. So, so there are 2 businesses which will never get disrupted: alcohol, tobacco, and pharma.
Okay, so thank you. I would like to thank all the panelists, Joy, Nitin, Gurmeet.
Thank you to all the panelists and Professor Sandhu. As a student of finance, this discussion has certainly taught me on how to develop a nuanced view towards analyzing the budget, and I'm sure many of our batchmates would agree. With the conclusion of the panel discussion, we shall now proceed towards the end of the conclave. In order to express our appreciation and gratitude towards the panelists, we would request Professor Sandhu to present the panelists with a token of appreciation on behalf of IMT Ghaziabad. We would request Mr. Joydeep Sen to accept the token of appreciation.
Thank you. Thank you.
We would request Mr. Gurmeet Chadda to accept the token of appreciation.
Thank you, Gurmeet.
Thank you. Thank you.
We would request Nitin sir to accept the token.
Thank you, Nitin. Thank you so much.
And we would now request Professor Sandhu to accept a token of appreciation from the POCs of our event.
Yes, sir. Thank you. Thank you. Thank you. Correct. Thank you. Thank you. I think it was a well engaging, I think enlightening. We would like you to come again to the campus. I think we will like you to be in classes as well. So be part of the classroom as well. Thank you. Thank you so much.
Thank you, guys.
We hope that we are able to have many such interactions in the future as well. Lastly, we would request all the students to participate in the blood donation camp organized by Make a Difference Foundation, and we request them to remain seated for a few minutes. Nothing.